who are here present. We recognize your presence and we say welcome to you. Please, a round of applause for yourselves. Distinguished guests, ladies and gentlemen, may we please rise as we take the national anthem.
Nigeria, we hail thee, our own dear native land. Though tribes of medieval, in brotherhood we stand. Nigerians born and proud to serve a sovereign motherland. Our flag shall be a symbol that truth and justice reign. In peace or battle, honor and this becomes us day. To hand unto our children a banner without stain. O God of all creation, grant this our one request. Help us to build our nation where no man is oppressed, and so with peace and plenty, Nigeria may be blessed.
Ladies and gentlemen, joining us this morning is Mr. Kayode Omotosho, the pioneer and immediate past Executive Secretary and CEO of the Mortgage Banking Association of Nigeria. Please give him a warm welcome. You're very much welcome, sir. Good morning, distinguished ladies and gentlemen, esteemed stakeholders and partners in the mortgage and housing sector. I welcome you to day 2 of the MBAN conference. Yesterday gave us a powerful start with 2 deeply insightful technical sessions that set the tone for the conversations we continue today. Our first session examined expanding access to affordable mortgage finance, offering practical pathways for widening the mortgage net through improved funding mechanisms, policy alignment, and innovative partnerships aimed at making home ownership achievable for more Nigerians. The second session took us into the future, exploring technology, data analytics, cybersecurity, and the innovations reshaping mortgage finance. We saw how digital systems, secure platforms, and smarter data use are not just improving efficiency, but redefining the entire mortgage experience from end to end. These discussions provided clarity, sparked new ideas, and reinforced the urgent need for collaboration as we confront the realities of a rapidly growing population and an evolving financial landscape. Today we will build on that momentum. 2 promises, deeper conversations, fresh perspectives, and practical. Today we build on that momentum of yesterday. Day 2 promises deeper conversations, fresh perspectives, and practical strategies that can move our industry and our nation forward. Distinguished guests, ladies and gentlemen, once again we thank you for your presence, your commitment, and contributions as we welcome you to day 2. Or if you like, some people might say it's day 3 because the first day we had a round table. So whichever it is for you, for some day 3, for some of us day 2, welcome as as we continue the journey with purpose and vision. Please put your hands together for yourselves. Going straight into the business for today, the first plenary session will be on public-private partnerships and institutional collaboration for housing delivery. But before we go into that, I crave the indulgence of Mr. President to call on Mr. Adedeji Ajani, Executive Secretary, CEO of MBAN, to come and give a welcome address from the officials. A round of applause for him, ladies and gentlemen.
Good morning, distinguished ladies and gentlemen. Please permit me to stand on existing protocol. Once again this morning, I'm excited and happy to welcome us to the MBAN 2025 conference. I want to especially appreciate all of us who have been here in the last 3 days, some since yesterday. We participated very actively. We've gotten a lot of ideas how to move our industry forward. We want to especially thank and appreciate all of you. Despite our very busy schedules, we made time out for this. We want to especially appreciate you. I want to thank the BOT chairman. I saw the just coming in now, Mr. Mapadero. Thank you so much, sir. You have been with us since the round table on Thursday and still here. Please let's appreciate the chairman, BOT of the association. So again, today is another day to go ahead and analyze critical issues that will move the mortgage banking sector forward. And so please let us also participate like we've done since the beginning of this conference. Once again, I'm happy to welcome you. Thank you. Thank you once again. God bless you.
Please give him a round of applause. Thank you very much, sir. Thank you. So we'll be going straight to the first plenary session for today. But before the panelists come to take their seats, I would like to call on Mr. Adeni Akinlusi, the MD and CEO of Lekki Worldwide Investment Limited, who will give a brief overview of the subject and also moderate the session. This session is on public-private partnerships and institutional collaboration for housing delivery. Ladies and gentlemen, please a round of applause for him as he comes forward to give us an overview of this subject. Keep clapping to the gentlemen, please. Thank you very, very much. Thank you.
Good morning, everyone. Good morning to the chair of the BOT and the president and chairman of council, my president, other members of council, chief executives of mortgage banks, my dear colleagues. Really, I'm very happy to be here because I'm back on my turf. More or less, this is my constituency, so I'm really very pleased. When I showed up on Thursday for the round table, I was really very, very pleased in terms for the discussions and engagement. So, incidentally, I will say that I'm an accidental presenter because on the program, all we have is supposed to be a presentation by CEO of by another party. However, I'll give an overview, but I want this session to be more engaging, more like experience sharing. So I won't give a big overview. What I rather want to do is call the members of the panel so that we can sit down and share experiences. A lot of people on the panel have deep experiences we can share with us in terms of using public PPP to breadth houses, development, beyond development, occupational, rental, a lot of things, how PPP works. We also share experiences on PPP, on infrastructure development, Because without infrastructure, really, there's not less you can do about housing. The roads you're talking about, the water, the sewage is not part of infrastructure. Alright, so I think more of us sharing experiences about what works, what has not worked, and of course also engage with members here. A lot of us have a lot to share so that we can have a session. And by the time we finish this session, we can know we really gained a lot. It's been an opportunity for us to share experiences, to learn from each other. So the more of very participatory and very interactive session. That is the session I have in mind so that it can be more engaging as well. And we have people who have experiences. For instance, my brother who is on the team as well, the other Olusodo, he has a lot to share with us on housing. I'll talk about my perspective from the infrastructure aspect, from the free zone environment, and of course other members as well, so that we can engage and see how can we put this and how does it affect housing, how can we use to move housing forward and work together to reduce this 28 million gap we have in housing. Thank you. And that will be my short comments or remarks before we get into the heart of the matter. Thank you, everybody. So maybe at this point in time, I'll probably take this and then we can invite other members of the panel to come in.
Alright, I'll quickly call on all the members of the panel. Please help me welcome Adeola Olusodo, ED Joint Ventures and Business Development, LSDBC. Keep clapping till we take the seat, please. Thank you. Thank you. I'd also like to call on Dauda Galadima, MD and CEO at Damawa Mortgage Bank. Please, a round of applause for him. I'd also like to call to join them the MD and CEO of Asasu Realty Limited, Mr. Salisu Umar Farouk. A round of applause for him, ladies and gentlemen. Thank you. And once again, our moderator is Adeni Akinusi, MD CEO, Lekki Worldwide Investments Limited. I'll hand over the microphone to him. All right, to join them on the panel is Oluwatosin Omisaki, Green Housing Associate from Infra Credit. Please, a round of applause for him as he joins them on stage. Thank you.
Dear colleagues, I expect we're going to have an interesting moment here. This session will be quite interesting. And the way and manner we want to go about it is first let each member here share the experience about PPPs, like as a refresher. What does it entail? We talk about it, and then we also now have interactive session. We can take questions, talk about what are the issues, what are the ways on moving forward. And in doing this, I'll send the ball rolling. Right, talking about PPP, I'll share some information about the Lekki Free Zone, which is also called Lekki Economic Zone. I always tell people it's the best kept investment secret. Until some time ago, I didn't know much about what was happening there. But as I tell you, when you talk about success of PPP, that exactly is what has happened and is happening in that zone. And I'll give examples. The zone, as some of us may know or may not know, is a 16,500 hectares of land. As a free zone, there are quite a lot of opportunities that come along with that once it's designated. And the institution responsible for that is NEFZA. Once designated, it is a place where it is to promote manufacturing, export manufacturing in particular,
to ensure that we can increase our earnings in foreign exchange. That's primary reason. Also to promote jobs, create jobs for Nigerians. Also to see how we can bring in new technologies into that environment. Also diversify the economy as well, and so on and so forth. And in that zone, we have what I call 4 different quadrants. I'm sure the one that a lot of us will know about is Alaro City, because it's related to housing. Alaro City itself is a joint venture. It's a PPP arrangement. As I said, I'll talk about that. Alaro presently sits on 1,650 hectares. It's a joint venture, a PPP between Lagos State Government, represented by Lekki Worldwide, and the Endeavour Group from Kenya. Endeavour Group is a big organization who has footprints all over Africa. They are in Ghana, they are in Kenya, Tattoo City. You can Google that. That's one of the major flagship projects. So it's a JV with Lagos State, represented by Lekki Worldwide. And as I said, it's a big development JV. The approval you have, the license from NEPA, is for them to have mixed development, which means you have sites for industrials development. Industries can come in there and they're operating there. We have for commercial development, which is offices are being built there, light industries, logistic park, and residentials as well. So this is a JV and it's working. As we speak, over 250 housing units have been commissioned and built, and people are living there. That is the JV. So that shows the success of PPP we have. That's one. And of course, because when you have the houses, also you must have businesses there. You have the industrials, you have certain companies there, you have logistic park. The logistic park called T.Y. Danjuma Logistics. It will be commissioned in December. It's a huge, humongous project, and part of it is to create jobs. So that is about Alaro City. That's just one of the successful PPP that regions we have. We also have in the zone as well. We have what we call Lekki Free Zone Development Company. It's another JV. It's a PPP as well, successful PPP by Lagos State and Khalil, China Africa Limited. It's a JV on 3,000 hectares of land. We have industries already operating there, and also have portions of land for real estate as well. It's a successful JV as well, and they are creating their quota and increasing the GDP of the country. That is one. Also, you may have heard about Lekki Port. Lekki Port is also a PPP arrangement as well. And Lekki Port is a PPP arrangement between Lagos State, federal government, and of course, Tolerant Group, and the Czech, which is a Chinese conglomerate as well. Lekki Port started operation about 2 years ago, and as we speak, it is becoming a major transshipment location. Before now, it's also the deepest seaport we have in the country. There is no seaport, other than river ports. And because it's of the draft, it's about 16.5, which means big ships can come in there and berth. Before now, big ships will go to Tema Port in Ghana, and of course in Benin. When they get there, they will drop cargoes for Nigeria there, and small ships will now bring them to Nigeria. Now, because of the depth, big ships can berth there and become a transshipment zone. And what it also does is this. This also, right now, is handling at least 25% of Nigeria's total cargo, and it can handle even 100%. It's a modern port, and that's also an example of a successful PPP. These are infrastructures now. I'm talking about infrastructure. Alright, so the port itself, all those projects I mentioned are also PPPs as well, which have been successful. And I must say, what has made all of this successful is because government has had to take a back seat and let business do its business. Business is doing its business. Government provides the enabling environment, supports them with the right policies, with the environment to ensure that they can thrive, and then they can create the jobs, and they can be entrepreneurial. At this point, I will pause here just to give us a background to issue of to give you a background to successful implementation of PPPs we have in our immediate environment. So I will hand over to my colleague on my immediate right and my brother and he will talk more about PPP, from LSDPC, housing and all of that. Just more to whet appetite and others will also contribute. And we'll take it further. Thank you all.
Thank you. MC. Well, I will, like you said, take it from the housing point of view, which is basically my primary constituency. And I will use, of course, LSPC as a case study. We ventured into PPP in 2015. And when we started in 2015, we had one project that was a joint venture between a private company, two, and then LSPC. And incidentally, I used to be in corporate affairs and marketing, so I was moved to joint ventures. And when I got there and reviewed the case, I realized that the transactions were totally negative. So sat down and I said, no, we're not going to do this. And what I saw basically was that, and which is still one of the issues we have with PPP in Nigeria, is that an average Nigerian or an average business person who wants to do business with government sees government as people who don't know what they're doing and sees an opportunity to shaft the government and to make free money. And so usually those businesses are never done transparently. It's a major challenge. I see it as a major challenge because it's something I have to contend with every day. And I say to most people when they come, and look, government is all of us. People look at me and say, I don't know what you're talking about. I say, look, people in government are just custodians for our collective assets. So if you or you and I go into business with government and we shortchange government, we are shortchanging ourselves. That's what it means. And so if, for instance, I go into a transaction and the land value, let me use that particular transaction as a case in point. The land value as of when they signed that joint venture with that person was put at 500 million. The land is in Victoria Island. When I took over and I reviewed, the land value then was 930 million. And so what the partner was supposed to build was supposed to give my organization a profit of 250 million as profit. So if you add it plus the 500 million which was supported land value, there's already a deficit. That transaction was a negative for LSPC. So I said, sorry, we can't go ahead with this. I said, no, forget it. Except you will use the land value that is supposed to be the figure. And when they put the 930 in, at that time, the land value was 1.2 billion. So I said, so if I use the current land value at 1.2, there's no transaction. Okay, let's even use 930, which was the value at the time you signed the JV. There was still no transaction. So we ended up paying off. We valued what they had done. They had done some piling work. We valued it and paid them 200 million and paid them off. And we gave the land to someone else at the value of 1.5 billion. Because I had to also make that 200 million that was paid back. And then that transaction was done. And I said to you, that transaction today is actually our biggest transaction because we have 9 towers on that transaction. So, what am I saying? As at that time, we had 2 bad projects we started with. Today, I have 35 projects, PPP projects running, JV projects running in LSPC. I've concluded and commissioned 5. I didn't count those ones. I'm talking about those ones that the majority will be completed early next year. So what I'm talking about is that for us, the government, the idea that government is for the taking is part of one of the problems we have with PPP in Nigeria. Even the private sector not help matters because when we go to do business with government, all we say to the government officials is, what do you want? And so for them, they are also looking at what's in it for me, rather than sit down first and look at how do we make this work, which is for the collective good of everybody. At the end of the day, make it a win-win. You as private sector will make money, government will make money, and then our primary goal, which is to build and create the houses that people need, we will achieve. And so I think that is a starting point for us. And of course, what are the drawbacks? I'll tell you the challenges that we faced. I've talked about one. The second one, the issue of professionals. We realized that there is a dearth of professionals in the housing sector. There are no professionals anymore in the industry, and where they are available, the developers or contractors or whoever the partners are not willing to pay professionals. It is only in Nigeria I see an engineer who is a contractor or a partner who will not pay a professional engineer his consultancy fee. So when you have projects and we have consultants on the project, consultant, engineer, QS, whatever, they are not paid. So you end up having situations where professionals walk away from the project, and then you have quacks and whatever, who are the ones who are running the project. And so we have projects that have issues. So what we have done at the LSPC is that because we have, of course, a large number of professionals where whatever, our professionals end up being the ones supervising those projects. Because they don't pay the professionals. So I say to them, but you are an engineer, for God's sake. Why would you pay your colleagues? I have to take this case to some of these professional associations and say, why can't architects? Well, you are an architect, you are a partner, and you are not paying your architect for the project. You are a QS, and you are not paying your colleague. So we have an issue with that, because that also affects the quality of what is turned out. So if we don't have professionals in-house, what will happen to the projects? That's another issue we have. And of course, one other issue we all have is cost, escalating cost of materials and issues. So we start a project and we agree a particular price, and by the time the project starts, of course, we know what happened with dollar recently. Everything is times 3, times 4. How are you going to? I mean, in fact, the partner literally cannot even finish the project. So I have had to, even as LSPC, I have had to give out some of our profit to say, look, don't worry, we have agreed a 60-40 share ratio. Don't worry, make it a 70-30, so that we can help you finish the project. Because our goal is to ensure the project is finished first. Of course, we also know that at the end of the day, when we finish the project, there will be capital appreciation on the bank and all that. So whatever we have given out, we will still recover it somehow. We may not make so much, but at least we will know we still make profit. So we have to now accommodate some of those issues, some of those things that ordinarily with the private sector you are dealing. So you have a situation where if you are a developer and you are dealing with the private landowner, you wouldn't enjoy such luxury. I am government, I can absorb such, because I know that at the end of the day, I will have the ways of accommodating it and all that. And we also have issues of dealing with government officials, the multiple taxes and multiple agencies that you have to deal with. The good thing is because we are government, we then interface with our colleagues. So we provide like a shield to our developers, and in situations where, for instance, take approval, for instance, it can take you forever to get approval. So what we do is basically for our project, we say this is our project. We will, once you put in and you pay assessment, in fact, we will also get a rebate for assessment where we need to get a rebate. Once you pay assessment, we start construction. We get approval to start construction while the approval is being processed, because we are government, so we can interface and do that. So there are so many things that has to be done, but I believe that it can only get better if all the parties really sit down. One major one, before I stop, so that others can also come, is the issue of mortgage, which this is why we're here. That is why you guys are here. We must find a solution to the mortgage interest rate in this country. I know there's MREF, there's all that, but I tell you, until it becomes quite affordable and sustainable, it's a major challenge. For us as LSPC, we're not really playing in the affordable housing sector now. And that's reality. We don't collect subvention from government. We are a fully commercial entity. From 1999, we run on our own, we pay all our bills. And I can say to you that an average monthly package of salary in less than 200 million. So if I pay that every year, I'm not talking about every month, I'm not talking about operation, I'm talking about salary. And so if I do that, I have to run my business and make money. So I can't go and be doing affordable housing that I will not make money from. I can only do affordable housing when government subsidizes. So when we do affordable, then government is subsidizing. So what it means is that we will do the building, the government will give us money, because we also pay dividend to government from our profits. So we will take our own profits as dividend and then use it to do affordable housing. So we say the government, we will put in our own contribution, which is our dividend. Government will subsidize the balance, and then we can do affordable. So it's more or less like we are subsidizing affordable. That's the only way we can do it. But we cannot go borrow at whatever interest and then give it to anybody. Which is why our focus has been PPP. Because we say to ourselves, how many projects can we do using our own funds? But if we do PPP, we leverage the private sector. So we have developers who come from different sectors, and then we can leverage that relationship. We can do, which is why we can do so many projects. So we are not only doing our own projects where we use our land. Now we're doing what we call third-party JVs, where financial institutions, organizations, individuals who have land with good title come to us. We also help them structure the transaction, and then we give it to any of our partners who have the funding, and then we can also help them do that transaction and help to sell. Thank you.
Thank you very much. I'm sure you agree with me. I think this redesign of the methodology is much better for us. It will be more interactive. They can engage and can have share experiences and ask more questions. So I'll give the mic. I'll go over to Ella Galadima now. Yes, please. That's the MD of Adama Mortgage Bank to share his experience on PPP.
Good morning, ladies and gentlemen. I would like to stand up against this table. I would like to discuss this particular topic from three perspectives, three or four perspectives. First of all, I would like us to cast our mind back to the statistics of the 8 million housing deficit in Nigeria. What percentage of that housing deficit is from Lagos, Port and Abuja? Because it seems as if we are only talking about these three cities when it comes to issues of housing. And my perspective is affordable housing. What percentage of that 28 million is spread across the other states of this country? We still have a major problem in this country, and that major problem is this rural-urban migration. Now, unless we design a deliberate policy of providing affordable houses, I'll come back to that later, affordable houses that will be accommodated and can be affordable by the other citizens that are resident in other states of this country, we will have a very big issue in our hands. What is the objective of MBAN? What is the objective of the mortgage industry? Is our objective just to provide luxury homes in Lagos, Abuja, and Port, and then so be it? No, I think our objective is to make sure that we have even distribution of houses that are affordable by every citizen of Nigeria across the country. That is one aspect of the discussion. The second aspect of the discussion I would like to elaborate here on this. From our own perspective, I would like to take the North as a case study. Here in the South, most guys married to one wife and maybe 4 or 5 children. My folks up there, and mostly the people that are in my age bracket, thankfully I have one wife. There are people that are in their 40s, 30s, 40s, and 50s. You find them with 4 wives, 16 children, 12 children. So if you are talking about housing, we are more pressed on the issue of housing up there than here. Until recently, I think from 2007, I want to take Adama as a case study now. From 2007 to the present government, there were provision of about 2,000 plus, about 2,500 housing units that were initiated and completed for occupation by residents of the state. Nobody has done an elaborate and ambitious building project more than this current government. In less than 2 years, they built 1,000 housing units. And it is there we are about to package mortgage for the civil servants, and the rest are offered for sale. But my main problem is this. I'm an advocate of looking inwards. When we talk about delivery of housing and then provision of housing, we look at the cost of materials for building those houses. What do we do about reducing those costs? The day before yesterday, I raised an issue here. None of us in this hall has ever looked at the paradigm shift of moving from this cement block that we're using that is so costly. When I was building my house back then in 2004, 2005, I was buying a bag of cement at 600 naira. Today a bag of cement is 10,000 naira. 10,005. Okay, 10,005. Have we ever thought of looking at these clay making machines that they import from South Africa, from China? Some of them have the capacity of producing 10,000 bricks a day, and they use just about 20% of cement and 80% of clay. It is anti-bullet. Bullet will not penetrate the blocks. You don't need to plaster it. If you are inside the buildings, they are much cooler than buildings that are built with cement blocks. These are some of the ways we can reduce costs to building materials. I've seen houses that were built with these clay bricks, even here in Lagos, Urban Shanta, did it here. There are a lot of those houses in Niger State. In my state, we have a lot of them. You can be able to reduce the cost of, erection of a house by at least 40 to 50% using that. How much are these machines? They range from $2,000 to about $10,000. And they give you a minimum of 10,000 bricks a day. Have you ever thought of looking at an alternative of producing roofing sheets from waste materials? There's a local government in my state, a very rural local government, that somebody is producing roofing sheets from recycled materials like plastics and tires. I know here in Lagos, I saw a documentary where a lady was producing tiles from tires, used tires. What are we doing about looking inwards and recycling those materials? This will reduce the cost of building materials by maybe about 50% a time. Now, talking about PPP, the bank I work for, which was recently, it was dead and it was resuscitated, not because of distress, but because of capital inadequacy. Went into a PPP because this is the first time that it's becoming prominent in the north, especially in the northeast. We suddenly realized that people were living in shelters, people were living in bachas, people were living under the bridges and the rest because of population explosion, and the houses are not there. And people are migrating from the rural areas to the urban areas, mostly because of insecurity and the rest. Okay, now the government alone cannot do it. So the bank now took it upon itself to start a pilot project. There's a recent developer that we went into PPP with. We gave him a plot of land which is about 20 hectares, and he's supposed to build 300 and some units of the houses of 2-bedroom and 3-bedroom bungalows. What we are running away from was what eventually happened. At the initial signing ceremony, we were looking at delivery of houses for about 10 million naira, 2 bedrooms. 3 bedrooms about 12, 13, 14. But today, because of the escalating cost of materials, those 2 bedrooms are going for 20 million. They are no more affordable because an average civil servant, a graduate, a fresh graduate that will join the civil service today in the ministry is earning maybe 120,000 a month. If you share 33% of his salary towards payment of a mortgage for those houses, it will take him more than 30 years to pay for that house. That's one. Can he live for the balance of 70,000 naira? He cannot. So all these things that we are chasing is a marriage, until we address the issue of cost by looking inwards. We might not be able to reach there. That's one. Two, he talked about the issue of professionals and the issue of titles and this. Adamawa State is very open for business. I think processing of title documents in Adamawa State will take less than 300, 500,000, everything, and you get it within a week.
Within a week?
Yes, sir. So we are open for business. If you are ready, I'll come fly back. No problem. So until we look at those issues, we might not be able to reach them. houses for citizens, how affordable is the affordability? This is something that we need to look at. And you start making those houses available by looking at the cost of materials, one. Two, addressing the issue of professionals, but then reducing their fees. Because if they don't reduce their fees, it will add fee of the cost of the house. And then liberalization of title documents and access to those titles. I think I'll stop here.
Thank you very much. Lady of Asasuri Reality, Sally Suma,
Good morning, ladies and gentlemen. My name is Sally Suma Farouk. I'm a mortgage consultant, broker, and a real estate developer. My brother talked about, I think, everything regarding real estate, partnership, and everything. So I think I will lean onto the mortgage aspect of this, since I have about a decade experience in this mortgage stocks. With all my experience in this mortgage and housing, I think what we are not mostly discussing here is mortgage education. A lot of people don't even know that the mortgage exists or work in Nigeria. I had a lot of this. You introduce a mortgage to people and they'll tell you, no, not in Nigeria, it doesn't work. So we took it upon ourselves to educate the general public about the mortgages before we started the development. We go for sensitization to a lot of organizations, and they will tell you they don't know about this. You introduce them to commercial mortgage, they will say the interest is too high. You introduce them to NHF, they will tell you they don't even know about it. Every month they will see a deduction for the NHF, but they don't know what is it for. But alhamdulillah, we managed to make a lot of cooperative projects, and alhamdulillah, thanks to the MBAN and Ogayaboya Jude. MBAN is granting cooperative development loan, and we have a lot of that. So until we started sensitizing the public, the general public, about these mortgages, we are going nowhere. I'm coming from the north. The first time that I know about the mortgage and I introduce it to some of my families, they apply immediately, they get it, the NHF. And from there I started advocating for it, and I started telling people about it, and they don't know anything about it. And also in regard to the delivery of this housing, I have experience with a lot of real estate developers coming to my office, telling me that they have built the houses, they are affordable, but they don't have the buyers. Why? Because access to the mortgage is a bit difficult. The interest rate is too high. I have a lot of experience with the foreclosure, as my brothers mentioned yesterday. A lot of loans were approved, but because of the cost of the mortgage foreclosure, a lot of applicants rejected the loan offers. I know this is not something that can be done within the shortest period of time, but there is a lot of people interested in buying the house with even the foreclosure cost and the interest rates, but they don't know about these mortgages. We managed to go every single month for up to 2 or 3 organizations, sensitizing the real estate developers, telling them the importance of these mortgages and how it works, and also organization, public and private. I think I can take a case study of about 3 organizations. We did that in Abuja. Immediately we finished the presentation, the management took interest. We built an estate for them. using the FNBN cooperative development loan. So I think if there will be a collaboration between the mortgage banks, the real estate developers, to go for desensitization to most of these private and public institutions, organizations, we'll have a lot of people to key into all these things. So I know a lot of the bottleneck in the mortgage industry is from the regulators, like the titling and other stuff. This is beyond our power. And I know the affordability is an issue too, which is not within our power. But as my brother said that, we can take a case study of the satellite towns, like from the north. Houses are really affordable there. And there is abundant properties with their sea of us. A lot of people want to buy those properties. They have a good title. The houses are about 5 million, 7 million. They can still afford if we use the mortgage for them. But they don't even know about it. So I think this is the major issue that we are not discussing, and I think we need to put heads together regarding the sensitization of the general public regarding the mortgage aspect. Thank you.
Thank you very much, sir. For IFRA credit, I want us to really speak to PPP's infrastructure and affect housing, so that at least people can engage and can be more interactive. Alright, so I'm sure you have a lot to share. Infra credit and involve infrastructure. Let's see how does this play out in your field, and then we can then throw it open for others to engage, and because we have a lot to also learn from the people. A lot of people here are very experienced in this as well. We want to discuss and share their own pain points and come up with and be much better off after this panel. Thank you.
Good morning, distinguished ladies and gentlemen, moms and daddies. I would like to use this opportunity to appreciate the leadership of MBAN for giving us this opportunity and an opportunity given to me by our CEO, who is on affordable asset due to official travels outside the country. So housing is a social good, and it's just the same way we depend on food on a daily basis. I'm sure no one here came from under bridge, so we need housing. It's a social part of our lives. It's a necessity. But Nigeria currently delivers below 100,000 units in a market that is estimated at over 900,000 units needed to meet the housing deficit. So what are we doing differently? Infra Credit has the Green Affordable Housing Program. Infra Credit has the whole guaranteed supported assets to the tune of over 308 billion for various infrastructure projects. And one of the sectors that is key to us is housing. And what are we doing? We have the Green Affordable Housing Funding Program that supports development of affordable homes. We are program focused on sustainability and also affordability. And one of the key challenges that it's obvious to all of us in this industry is affordability. So we play on the supply side. However, as a credit guarantee institution, we also look for ways to de-risk a transaction. So one of the key transactions that we've done is the delivery of 370 units in National Technology Village, which is a typical public-private partnership. The whole idea of public-private partnership, I've always heard this while I was an undergraduate. And in fact, my project was on public-private partnership for road infrastructure. Now, this is housing. One of the key challenges is, just as our distinguished panelists from LSPC, it has to be a win-win. If it's not a win-win, there is no deal. So on the supply side, we look out for developers or PPP projects like the NTV with land title. We know there's a gap in the market of 100% land in Nigeria, less than 5% has the new title. And as a lender or as a guarantor, you don't want to back a project where land title is an issue. And that is why most banks are not comfortable lending to real estate because of our foreclosure and many numerous issues. I know we have a lot of issues, but the real focus now is what are the solution. And I know that this round table is a critical step in, that would redefine the future of Nigerian mortgage industry. So how can people work for affordable housing? How can we, what are the delivery models that we've seen that can make affordable homes achievable? We have expandable models whereby a studio apartment can be expanded to a 4-bedroom. So this reduces the entry cost for the low income earners. And we also have to look out, beyond. We had the technology that uses the stabilized soil blocks to construct, but we also live in a market where the so-called target that we call affordables want to compete with the cream de la cream. You don't want our homes to look like it's for a poor man. The poor wants to look like, wants to have a home that is competing, that looks like the house in Lekki Phase 1. So we also have a cultural problem whereby people perceive because they are building with bricks, because people perceive our home. That's not the truth. So for us at InfraCredit, a key leg for our transaction, what I think MBAN is very key to the success of mass housing delivery in Nigeria, is your capacity to provide offtake guarantees. How can you de-risk? How can MBAN de-risk transactions? How can MBAN de-risk transactions? We have, just like our distributor said earlier, we have developers that have sought money from various sources to deliver these affordable homes. Now they are stuck with inventories. As a guarantor or as a lender, you know that your repayments, when you look at your amortization schedule, there's no story that it takes a long time to process a mortgage. Also, how can we also improve the delivery? If home buyers come to us, let's not take 6 months to process their mortgages. Let's allow efficiency to be our aim. That way, people are applying for mortgages. They are not bogged down with numerous documentation. That's what the developer is. Getting lower margin because it's playing below. The pyramid. He's getting his money, and the idea will be turned over. That is, you move from a project to another. If you build a property in Lekki, even if you don't sell, at the end of the day, you are gathering property acquisition every year, and you eventually exit at a multiple that will comfortably take care of your cost of finance and profit. But that is not the same game for affordable housing that we want to deliver at scale. So I've highlighted some issues. MBAN has a critical role when we can now support our developer to de-risk transactions that will make lenders comfortable. Okay, my developer is building 1,000 units in Adamawa. I cannot take 100%, but as an organization, as an association, we can put together a syndicate of money that can put like some form of offtake guarantee that will make the lender comfortable. And also our processes for home loans for civil servants and the likes, we will make the processes faster. That way, InfraCredit, our goal is to deliver over 10,000 units. That is still even small compared to what is needed in like 5 years. So I would like to tell you all that we are open to business when it comes to creating affordable housing at scale. Look open to PPPs because we believe that housing should be seen the same way we see the toll roads around us that connect us. That is the same way we need affordable housing, because if you don't live in a comfortable environment, it will affect your productivity and your well-being. Thank you very much.
Please remember to send him an invoice, marketing invoice. Alright, at this point I'll throw it open. I think we'll start with the president of MBAN. We have some comments, and then throw it open for others to engage. Either comments, contributions, or questions for the panelists. So then we want to enrich this. Let's start with the president of my president. Yes, give me the mic.
Good morning, everyone. I'm very happy we have this. This is like what they call the bottom pot. And people that are missing this session are really missing a lot. But I just want to comment on the presentation by the ED. Good morning, sir. I've been trying to meet you. I think there is a comment to be made, and there should be a role for state governments in affordable housing. They have to, because the federal government is on its own, giving us single-digit mortgage. And in giving us single-digit mortgage, federal government is underwriting a lot of things. So if they do single-digit mortgage on 1 trillion, essentially they are giving us money at 0% on 500 billion. Because when you blend it with private money, that it comes down to the 9. So they are doing a lot. The mortgage banks and the regulators were doing a lot. Setting up this, driving the industry to focus on what will move us forward. But what is the state government doing? Because you made a statement that it is not the job of LSDPC, which is a corporation of Lagos State, a city of more than 25 million people, to do affordable housing. It should not be something we should be proud of. And I will say it to you. There are a lot of things within that value chain that to perfection. Lagos State stands aloof and charge you your blood. They don't get collected. They don't think it is part of their job to look at the way to make the process more efficient, and then and the pricing to drive affordable housing. Bringing down on it, they will charge. They don't care whether you are doing house within a certain. When you had engagement with Lagos State governors before, you know, even when the past president was there, when Dr. Femi Johnson was there, I would never seen any change. My executive director, it is the responsibility of Lagos State to also have a strategy around affordable housing. And it's not the job of the government, it is agencies like yours that will tell the government, this is our strategy around it. Just like my brother from Adamawa, and then the government will say, I approve it. Because what is a dividend? 2 billion, 3 billion, maybe from LSDPC. But if you look at the impact of having affordable housing driven by Lagos State, the leverage you have is land. Land given to you by Lagos State in strategic places, in areas that we can only dream of. And I think LSDPC should rethink it. Then on the mortgage, it's difficult to do mortgage on LSDPC property because every time we want to underwrite, it seems they don't even understand or they don't want it. The first thing is title. They will only LSDPC will tell us it's only allocation letter. You cannot underwrite any mortgage with allocation letter. No, sir. 12 years experience as a MD of 2 mortgage banks. I try to do at a living trust. I try to be an employer. In fact, we do exception when I see that it's LSDPC. Just go and confirm the allocation letter. Then we will underwrite. But in 3 years, we will not get the deed on that allocation letter. 3-4 years. I have some we did before COVID. So I think it's a discussion we need to have. And I'm not blaming you. You know, you are executive director, joint venturing. There's a lot of moving pieces around that you might not be able to answer to. But MBAN and Lagos State agencies like yours, you know, for a city of 25 million, Lagos cannot boast of more than 8,000 affordable houses, which they already do through Lagos homes in a year for the last 6 years. I look at what they do, we try to catalog it at Lagos homes level, at some resettlement level. There needs to be intentional. LSDPC, we are doing 35 projects. Can we make a third of it approved to affordable homes? There are some lands opening up. I saw the one by Adeniji Adele. They were trying to sell it to developers. They were trying, I saw letters from Lagos State, and I was like, this can be a place where Lagos State can also make a statement. So, sir, it's a comment, it's not a question, because I don't want us to go back and further. LSDPC, MBAN, we are ready to work with you. One, on making sure that a lot of your assets, we can do mortgage. Even if they are 170, 180 million, we can still do mortgage. If the people can do 80 million equity contribution, we do MRIF 100 or whichever way. Once the mortgage can be, so we can do. But unlocking this letter of allocation issue is something that we can work together. If it's what we can collaborate to solve. First, second week in January, we can have a sit down with you and we can go through it and make it seamless so that we'll also be looking at the development you are doing. And when you say you don't go affordable. I look at some of the houses now, I don't see them too much. A lot of them are under 200 million naira. And I think most of our customers can pay that. They can do 100 million equity contribution. In fact, some of them, their houses is even more than 100 million to the 25%. So don't let us also go over the fact that they are actually within the affordable brackets. So collaboration is what we need to do, and then the intention that you can, as part of your portfolio, do affordable housing. Thank you, sir.
Thank you very much, President. Yes. I'm sure, though the President said that it's not a question, it's just a comment, I'm sure a lot of us will be enriched. We want to hear from the Executive Director. Because if it's an issue that affects the industry, affects everybody, let us know what the issue is, and if you can dimension it. Even if you cannot conclude on the conversation here, we can take it after all. It's only right for him to have the right of reply.
Thank you, my President. I totally agree with you that there's a lot government needs to do. I must say that when it comes to LSBC, for instance, the issue of allocation letter, let me take that first. I don't think there should be any problem with documentation, because the allocation letter is just the first document that is issued. After that, there is a deed of sublease that is issued. That sublease is registered usually in Lands Bureau. So LSBC issues a deed of sublease on every property. So, and that is something that is easy to register, and you can also use that for your documentation. So maybe what we need to do is, sit down, come around, sit down with our legal people. So what happens usually when allocation is done, when people buy properties, once they have the allocation letter, because it's a government document, they just take it, and I don't need to pay, I don't need to go and pay to government doing a deed of sublease. That's what happens. So which is not tenable with you really. You can initially take it, but that's not really what you need to do your foreclosure or to do whatever documentation you need. So just insist that that person should put in for a deed of sublease. And it doesn't take long. The deed of sublease can be ready in a matter of weeks, and then that can be taken to Lands Bureau to register. I totally agree with you on the issue of government needs to do more with affordable housing. There has been some disconnect in government. With Lagos Homes, for instance, Lagos State government under Governor Fashola took it on to say, and I was part of that discussion then. And what Governor Fashola had in mind was to do what is called affordable homes, using Lagos Homes as a model where houses will be built, and then the mortgage will be under 10%. 9%. And then it was 9%. But it was the same. The system that said we can't go below MRI or whatever, we cannot do it. And Fashola got upset, and he was like, look, if you guys cannot do it, I'll do it myself. And he was building and then set up Lagos Mortgage Board to start doing it himself. He just got pissed off that, what is this? I want to do something, you are saying the system, I can't go below the CBN rate, I can't do this. And the man got upset, and he was like, look, I'll do it myself. Of course, it's not sustainable. We all knew what happened. Immediately Fashola left, the next governor just shut it down. And until someone came and then built all those houses, and then which are the things that are being commissioned now. I think it can be revisited. Let me tell you this, I'm a government official, but I must say that even within the government, and this is where an organization like yours need to work more with the professional bodies. I think the interesting thing, the professional bodies, most of the fellows and the people who are the executive and civil servants. Can I shock you? Most of the fellows and executive, most professional bodies are civil servants, and they are the same people who do policies that are anti the people. That's the truth. I always tell them. I always tell them that, look, these are the same people. Some of these things you're talking about, this issue of rates and taxes and all this approval fees and all that. It is these same civil servants who sit down and are the ones who are busy. They say we have target, government is looking for money, and they are the same ones who are implementing it and creating the problem. But these are the same people when you have professional bodies meeting, they are the ones who are the ESCOs, town planners and all that. They are the same people. So we need to sit down and tell ourselves the truth. I always tell them, look, you guys forget that you are in government today, you are going to leave government and you are coming out to meet everybody. You are also going to be on the other side one day. And that is the truth. Nobody will stay in government forever. Unfortunately, maybe next year when you are coming to LSBC, I may have been moved somewhere else. That's the truth. I may not be there. So whatever we need to do, we need to sit down and look at it. But like I said earlier when I started, every Nigerian, whether you are in government or you are in private sector, I told you my experience.
I have 35 projects running today. Every one of my partners wants to shortchange the government. And I always say, look, you don't have to shortchange government, make it a win-win. Because if you come today and I compromise with you, you're offering me something, what do I want? And I compromise, I leave. If Nick comes tomorrow and sits on my seat, the first thing he will do is undo what you have done.
Yeah.
Because he will say it is not equitable. When I got there, I looked at some of and I said, look, this does not make sense. I always tell them, whatever I do today, bring it on board, bring somebody else to come and look at it. I can defend it. So that is the spirit with which all of us must do this work, whether you are government or you are private sector. I have done transactions with private sector people who are on this one, most of my PPP projects. But I tell you, some of them, when we agree something, they do something else. And I'm saying, but you are supposed to know better. You are private sector, you are abusing government, but you are doing worse than government. So who are the people in government? All of us, we are all government. I always say, we are all government. You are not in government today, tomorrow they will appoint you and you become MD. You are also in government. So that is the mindset. I think the mindset is purely all of us, we are all guilty of it. Most Nigerians, all of us are guilty of it. Like I said, the people who make the policies, who are decision makers, are the civil servants who are also executives in all the professional bodies, and they are the fellows who make it. So we need to, there must be a total orientation, a mind shift. So MBAN needs to sit down with the Commissioner for Housing in Lagos, because the affordable housing sector is handled by the Ministry of Housing. Because there is a budget every year for affordable housing. So that money is set aside to build affordable housing, which should be affordable and big. But what we're doing in LSD, like you said, with MREF now, most of our houses are also affordable. So we'll bring them on stream. So we'll sit down together and then ensure that whatever problems we have, we can work together and make it work. Thank you.
For the passion, what we don't know about my brother here, he's also a reverend gentleman. And he has said, and we both of us have a deeper connection, which I will not reveal now. Yes. And he has said, I'm a Muslim, I'm not a pastor, but I know that people often say that all have come short of the glory of God. Yes. It's time for us to do what? Repent. And start doing the right thing. Thank you. If you have more comments from the floor on this, on top, either some of you that have been discussed or other areas, you know, because this is quite very enlightening and very, very enriching as well, and very engaging. So if there are comments, questions, okay, you want to have it?
Morning all. Thank you. It's been quite enriching. Thank you, Mr. or Pastor Olusodo. Thank you very much. After I finish, we'll collect thanks. Still treasurer. Whichever way we look at it. Like I was just mentioning to President, and I agree with you, is we need to expand this scope. Well, maybe the next roundtable or before the next roundtable. I think there needs to be, what you just said makes a lot of sense. Engaging the town planners, the surveyors, so that there's a uniformity. And like you said, if they come out to the public and are saying something else, or in the association saying something else, or go back into government and is doing something else, then it negates. I'm not clear. But if it becomes like a transparent prison, what they are saying inside, you know that it affects it, and everybody can see it, then we go down. You understand? Shockingly, one of the things that when we do tightening, usually affects a lot of business people. You have a way their income is structured. But if a business person buys an LSDPC house of say 200 million for example, it will shock you too that when they want to look at assessments, the assessments are not technically based on their income. They will now assess them based on the property you're buying. That's an aberration. So you see where you're now going to be paying. After you've paid enough tax, you still come out to be paying tax on another like almost 5-10 million. And we're complaining that the cost of perfection, cost of the transaction cost for a mortgage is crazy. And if you don't do it, you maybe how many, what is the percentage of registered titles that are on board? These things are not registered. How? It's the ones that are registered that can do transactions on. So you see, there are deeper problems that we have to. And then the truth is, it would have been good if we had actually had some government, not you per se, but to call government people in here. Because there's a lot that needs to be done. Understand? Like we had complaints on yesterday. When if someone who's buying 100 million house or 200 million house, the cost of transactions almost 20 million. How? The best just looks at it and said, maybe I need to go and make payment plan with the developer. And it defaults of the potential mortgage transaction risk. So I think there's a whole lot that we need to do, and then we need to be advocates of a lot of reforms, whether formal or informal, in terms of what needs to be done. Thank you.
Thank you.
So thank you, sir, for that issue you have just raised. Now let me just tell you something that I'll let the cat out of the bag. I was part of a team, that looked at a product for mortgage registration, and the Lagos State government will launch very soon a product, because I was part of that team back end. Lagos State government will launch a product very soon that will make registration of mortgage in 30 days. I more or less facilitated that transaction. So it's being worked on. They're doing all the internal works now, all the IT back-end work, such that it will be a one-stop shop. Once you put in your mortgage, they will handle it with all the government agencies. So it's something that in January, I'm sure, will be launched, so that all the backlog and all the mortgage issues will be resolved. I'm giving you that for free. Please, that's for this week. So so there are a lot of things. Some of us, like I said, these are things that are being done. The issue is, like I said, it's a total mind shift for everybody. The country needs a complete reorientation. When we all know that, look, once it works, we all benefit. This idea of some people see themselves as, because we're in government, we're different from us. No, we haven't won. Because you will leave government one day. I always tell them, one day you will leave government, and you're going to be out there too. So don't see yourself as, because I'm here, I'm insulated, I can do whatever I like, just like you said. But one day when you leave, the guys you are leaving behind will tell your guy, your time has gone, you are no longer here. And they will treat you, whatever problem you have created will now haunt you, whether you like it or not. So, but I believe that for MBAN, the good news for you is that come next year, hopefully in January or thereabout, that product will be launched and it will help your system to be able to register your mortgages. Thank you.
Again, when I hear some figures, especially as it relates to housing in Lagos, my head starts to spin. You understand? I mean, are we looking at a case of one country, two nations here? My state is open for business. Please come. We are waiting for you. I mean, developers can come within a space of 30 days. We can get you a piece of land, do the titling, and do everything. You understand? Forget about Lagos. Go down to look at the turnover and look at the numbers. You understand? You waste your time in 6 months. You are talking about a mortgage for one house here in Lagos, where you can arrange mortgages for 500 houses up there in the north. Please come over to me.
Please note, this is another reverend sales and marketing pitch. And he made a full disclosure. He was a salesman before he went to Adama. Whatever you charge the other man, double it. Any other? Sorry. No marketing this time.
My other brother here was talking about houses for poor people. I don't know where you live, sir. The way I look at it is we are talking about housing, which is a basic necessity in the hierarchy of needs for people. You understand? You can talk about your top maybe 0.5% that are the baboons. You understand? We are talking about the monkeys that are at the bottom of the ladder. We are talking about provision of basic housing for citizens of Nigeria. You understand? So no house is meant for the poor people. Even the cubicles that the late Mandela built for the blacks in South Africa, today they are I mean, people are occupying them. You understand? And in Nigeria here, traditionally, there's nowhere you will go where they build houses with bedrooms of less than 12 meters, 12 by 12. Is that also? This is quite standard as far as I'm concerned of affordable. So let's talk about mass delivery of houses, not housing for the ones that Government Center did here in here. They are one of the most prized houses that you have there. They were built with bricks. Thank you.
Alright, thank you. Before we take it, I think the point is for us to know that there are different strata in the housing scheme. You start with shelters, which are for the people who are homeless. And then you have kitchens for them and all of that. They don't have any source of income. Some of them have issues, medical issues. You provide shelter, they're not supposed to pay. That's the lowest level. Take them off the streets. The next level is level of social housing. You clean them up, if they start getting jobs, and then okay, fine, they cannot afford this kind of housing. Social housing is the next level, right? Before you now talk about middle income, affordable housing, then you have upper middle. So really, there are different institutions catering for all. That's why you find that most ministries of home affairs, or ministry of social welfare, they do all of that for those people. And then of course, you have the next level for social housing. NHF was supposed to be social housing. And that's why that is what it was programmed and structured to be. And that's why you find out that even on the board of Federal Mortgage Bank, we have represented by labor. They are there and they are key. So I'm just saying, so we have some of those and for different levels. Of course, family also was supposed to come in and also support in that aspect. And of course, as he also explained, when it comes to supply side, it is mostly the Ministry of Housing for Lagos State. It's not LSDPC. Basically, we cannot afford, because if they are going straight into that area, it's almost like an issue in terms of strategy. Alright? But now that as we also know that because of MBAN and the money that can be available, of course, we can also play into that so that we are clear about it. And there are different strategies for different areas of the housing. Thank you. We have a comment, please. Yes. Before we wrap up the session. Okay, there are more comments. Alright. It's getting more interesting.
Okay, first and foremost, I think I'm probably the medicine interloper at this session. So I'm not a banker, I'm a developer. So what I just want to do is just put a bit of context in terms of PPPs and the experience we've had. Now, I know the MD from Adamawa Mortgage has basically said, why is it that it seems like the focus of the conversation is typically Lagos and some of these other states. I will tell you from my own experience, one of the things which I would commend Lagos for is the fact that a number of the people we've had to work with on the government side understand what it means to run a PPP arrangement. I've done projects with LSDPC, Oluwole Urban Market. That was our project which we did with LSDPC. And I've also done projects with states outside of Lagos. Let me tell you, a simple baseline requirement for doing any housing project, especially if you are trying to capture affordable markets, is if the state can provide connect infrastructure to the site. That simple thing sometimes becomes a huge obstacle for most states to even be able to understand. The other thing here is when it comes to pricing the project and being able to do the costing, the general philosophy which a lot of them have is that you're just typically building a building. But a building is only as good as the environment that you place that building in. And so that means in terms of costing that project, you need to be able to provide an infrastructure that reduces the total cost of ownership for that product, that home, to be able to last as much as 20, 30 years. Because without that supporting infrastructure, that home, give or take, you just have upgraded shanties. Literally, that's what it is. So I'm just giving my own context in terms of the experience we have with working with a couple of states outside of Lagos, trying to get them to understand some of the nuances of PPP and what the government still needs to provide outside of the funding which the developer is providing to actually build the homes. So hopefully this is the feedback you can probably take as ways of encouraging the private sector developers to actually do more projects in your state. Thank you very much.
Gender balance, I think we have the answer, yes. What we have more formalities
Thank you very much. I'd like to appreciate the MBAN executive for this roundtable discussion. So my contribution is a bit incremental from the discussion in the past 3 days. And when we're looking at the supply side, I know there was a mention of bumper. So I don't know if the MBAN executives can look at that side of it, the Association of Building Materials, because I know that we mentioned the cost of building. And if you when I heard what Gateway, not in any way to distinguish any mortgage bank, but what they did, the collaboration between the building material providers, the collaboration with the state government and the mortgage bank, I think maybe for subsequent roundtable discussions, for us to have a more holistic ecosystem and to deliberate. Let's see if we can invite OPA and see what innovations they can bring into the building materials, so that, you know, for the mortgage bankers too, when we're looking at the construction financing, we can have a more structured approach in dealing with them in different state levels. Yeah. Thank you.
Thank you. There are no more comments. Probably bringing this to a close in this session. Okay, see one from.
Good afternoon, everyone.
Good afternoon.
I'm still on existing protocols. My name is Owode, and it's actually a privilege to be here. I appreciate the executive of MBAN for putting this together. I will say that this conference has been very, very outstanding as it's well. And particularly I was moved by the statement made by the ED, that's LFDPs. And then I think it was very factual, and then it spoke to a lot of things and principally to our hearts. I want to believe we've all had opportunities to sit in rooms like this and have this kind of deliberations. So that this conference will not be like other conferences that were attended and then we speak and then we leave the room and then we come back the following year and then we have the same discussions. I've been privileged to attend these conferences for years, and it's also good that looking at where we are from where we were, that there is significant progress and achievements. But really, in addressing housing issue, there are very basic, fundamental areas that we need to be very intentional about. Looking at the supply and the demand side. The demand side, there have been a lot of initiatives in past years to provide platforms from which prospects or subscribers can take advantage of. But if there's no supply, the demand side will continue to decline. And so a lot of attention needs to be paid to the players, on this side. I want to believe there's a lot that governments and government agencies can do very intentionally. If really we're trying to draw a model that we're going to roll out affordable homes, and I'm saying that in inverted commas. When we're looking at affordable homes, that means looking at the different stratas of housing as well. Affordability can also be defined in terms of who is subscribing. But if really we are very sincere and intentional, and also be able to have results that we can work with when we leave such a room as this, then we need to be very pragmatic and very real in our results and submissions. The supply side actually need a lot of support, and there are a lot of ways and instances that governments can actually provide that support. Of course, money bank needs to collaborate a whole lot more with developers to be able to enhance that side, of play as well. Infrastructure is critical to speaking to affordability. There are areas that will not open and developers will not go there because their infrastructures, if they build it or whatever they are rolling out, it becomes unaffordable. And an average Nigerian cannot afford it. And we need to look at realities and do market surveys and profiling. I was privileged to be engaging a team of, I won't narrow it down to the name, but they're actually the top echelon of a university, and it's a first-class university. They're actually the professors, and we're trying to market them to subscribe to take commitments. You will not believe a professor that's put in so much cannot afford 12 million naira home. So all this that we're looking at the initiative solutions, we need to be real and intentional. I salute you again, ED, because it says some very critical things. We need to begin to speak to, if we are really trying to work and leave a legacy, that they will look at later on and say, yes, this team and so resolve this. It's not so much as in the books and the lectures. We need to dimension the problems and be real and set to resolve them. Government needs to move in where government needs to move into. And I salute you, sir, for that solution that you mentioned about legislation. It's a very serious problem. It's part of the landing cost and taking away affordable and transferring it to unaffordable. It's not every Nigerian that can afford 40, 50 naira home. Where are the affordable homes? And it's the developers that do that. They need government support, rural electrification, opening of roads, any form of support that they can get, so that affordability is actually affordable, and people at the lower, edge of the pyramid and echelon can actually have affordable housing. It doesn't matter if they good people, as long as it's functional, and then we begin to reduce the numbers. Thank you very much.
Okay, so Madam, thank you so much for that. This is something that is inexhaustible. We can talk till tomorrow on this. But I must say that my friend from Adamawa, thank you. You brought back nostalgia because I actually served in Yola in those days of the Wola state. So I served in Yola. So I was trying to imagine what Yola would look like now after almost 40 years that I served there. But my issue is, in my village, almost 90% of the homes there are locked up and empty. In most villages in Southwest, in most villages in the Southwest, houses are locked up and empty. So when we talk about housing deficit, I always say it. All government needs to do is to create the infrastructure that can connect those places to the cities. People live outside London and work in London. I don't see any reason why people should not live in Ibadan or in Ijebu-Ode and not work in Lagos. If there's train connection and all that. Go to those places. The people who live in my father's house in the village have lived there for over 15, 20 years and have not paid a dime. Because you just want somebody to be in the house so that it doesn't dilapidate and fall. And so that's the situation around, like you said. So when we talk housing deficit, it's not nationwide, the truth be told. It's not a nationwide problem. Madam, some of the things you talked about, the primary infrastructure is key. And that's really government's responsibility to open up. I took a drive a few years ago to Lekki Free Trade Zone. Then the Dangote refinery was still under construction. And when I left my house at 10 a.m. on a Sunday morning, I deliberately left on a Sunday so that I can actually, to avoid traffic. I got back to my house at 6 p.m. in the evening. I drove myself. And when I was coming, I was almost swearing in the vehicle that it's only in Nigeria that will build this kind of magnificent infrastructure or the factory or plant or whatever, refinery, without providing infrastructure first. It's only in Nigeria to happen. I said, are we okay as a people? In other climes, they will first build the infrastructure before and do all the necessary things they need to do before they site the refinery there. But in our case, it's the other way around. And that's how we do things. And so we need to look at ourselves and tell ourselves the truth and really address some of these issues, like I said. It's unfortunate that we have found ourselves in this situation, but it's still redeemable. if we are all committed to it, both from the government and the private sector perspective. Every hand must be on deck. I started engaging the Ministry of Housing, Federal Ministry of Housing recently, on how to take over all the abandoned properties in Lagos. So that some of them can be converted to rental homes, some of them can be converted to first-time home owners, so that we can retrofit them and do them. I will need MBAN for such a thing to happen. So these are things that we need to do, but of course, like everything in Nigeria, you have to go through bureaucracy and bottlenecks and all that. But because of my position, I could engage at that level. And so it's something all of us need to just, all hands must be on deck, take on the responsibility and say, look, I want to do this. I want to just contribute my quota. And like you said, most times when we gather like this, it becomes a talk show when nothing is done about it. Because the following year, we'll still come back and we'll address these issues. I must say that we must engage the governors more, because they are really the people who have all the power. And when we engage them, insist that they give you somebody who understands what you want to do in the system, who can work with you, and who will give them the feedback and get the approvals that are required to ensure that those things are done. Thank you.
Thank you, everyone. I'm sure we agree that it's been a very engaging session, very interactive as well, and no owns brand. No owns brand. And I'm happy with the kind of conversation we've had, high ball to high ball. Let's tell ourselves the truth. It's all about infrastructure. Even we know that in any economy, if 2008, when we wanted to inflate after the subprime issue, the only way the government could restart all over the world is what? Spend money on infrastructure. TAP is there, which is what Obama did. Even Biden did that as well. Talking about spending, and we must also say that a lot of that is being done by Lagos and even this present federal government. He talked about the Lekki Free Zone. The coastal road you are talking about, the coastal road passes through the Lekki Free Zone. It's going to connect 9 coastal states from Lagos to Calabar. It will take 7 hours. The implication is it will open up all those areas apart from the maritime blue economy that will open up as well. People will start coming out, all the values of those lands are going up now. So I'm just talking about the purpose, and apart from just connecting, you are creating jobs. So the infrastructure is very, very important. And that is why a lot of organizations of states and even government are doing PPP. Government will not have the money. You cannot use all Nigerians, even if you decide to commit all Nigerians' budgets to infrastructure, you will never have enough. Yeah. What about health? What about agriculture? So the only way is what? PPP. And that is the only way when government fixes that or is seen to be serious. And of course, that's why that infra credit, you have organizations too. So I think, as I said, it's quite engaging, and all of this is important. If you don't have the primary infrastructure, you cannot have the secondary infrastructure that connects to the houses and the housing estates. If there are no roads there, are you going to do everything? All this cost of infrastructure, sewage, roads, water, if you add it in terms of secondary in the estate, to get lighting from outside, if you add that to it, it cannot be affordable. So that is very, very key. And of course, I know there are different modalities for that. Different arrangements, roads can be tolled and all of that. So these are the things we want government to look at so that we can make the place more. There is no affordable housing without affordable infrastructure. Thank you, everyone.
There is no affordable housing without affordable infrastructure. Ladies and gentlemen, we're going to end it. Please keep on resolving the engaging conversation. Please, photographers, can we take the pictures so that Mr. President, please can we join them? This session was on public-private partnerships and institutional collaboration for housing delivery.
This was No, good for that one.
Ladies and gentlemen, we will be going into the next session in a very short while. We want to say thank you to all our sponsors, all those who make sure that this gathering, this conference is a reality. We thank you and we sincerely do appreciate you for being a part of this annual conference that comes up every year in this country. Thank you very much. Please, a round of applause for our sponsors. And thank you very much. The next session will be on strategic engagement, the strategic engagement forum, showcasing excellence in housing delivery, success stories and the future of housing finance in Nigeria. Alright, so the moderator for this session is no other but the MD, CEO of Home-Based Mortgage Bank, and also the Vice President of the Mortgage Banking Association of Nigeria. Please, a round of applause for the moderator as he comes forward. On the panel, we have the MD and CEO of UPDC PLC. MD and CEO of UPDC PLC. We also have the MD and CEO of Mixta. A round of applause. Please can we give him a round of applause? Thank you. MD, CEO of Sasu Realty Limited. Please can we join him? MD, CEO of Sasu Realty Limited. And also Mr. Damola Akindolire, Senior Consultant, C23 Consultants Limited. Is he here, please? Is he here? Alright. I want to recognize the presence of Dr. Femi Johnson, Vice President of the Mortgage Banking Association of Nigeria. Please, a round of applause for him, ladies and gentlemen. Very much so. The Chief Commercial Officer, Mr. Tola Akin Soye, is representing the MD and CEO of Mixta. Please, a round of applause for him. Thank you.
Hello, MD Infinity, Madam Ngozi, please could you join us? Thank you very much. It's something that we're all used to. Thank you very much. And then Ronke, so that we're balanced off. Ronke, please could you join us? Let's join the panel. Thank you very much. Welcome. Thank you very much and welcome. Towing the line of my past president, Nia Kimsey, I think we'll also make it an open discussion. Yeah? Thank you for everybody who's joined us. Yeah? While our acts, I'll also just get us to. I want it to be an open thing and discuss and be able to share ideas. Out of all of us sitting here, a lot of us are playing on the road. So we have two finance side, supply side, we have an intermediary, and then we have the blessings of having a major player in the production side. So I think it will be him that give us some level of landing for our discussions. Thank you, sir. Thank you for Mixstar, and we'll see what Mixstar has been doing. I would want you to share with us, okay, what has Mixstar's experience, because you've played, you guys were one of the first people that engaged that middle line and actually determined that dichotomy within the Lekki axis. Before now, you had it island and mainland. Mixstar, one of the major people that now came in and now broke that island into two. So you had the side facing Dangote, and you have people who live there without even coming down to island, neither going to mainland unless they're going to the airport. Please share with us what your experiences have been and what your production, what you understand how has been the challenges that has been. Thank you.
Okay, thank you very much. I stand on all existing protocols, and thank you very much once again for inviting us to be part of this discussion. And my hope and expectation is that from this discussion, we actually will create a foundation for actually making transformations to housing delivery. So, talking in terms of the success we've been able to record, I think it would be impossible to actually talk about the success of housing delivery from our own perspective without recognizing one of the most important aspects that plays in the mind of people when we really want to give them the house. For you to successfully deliver the right house, you need to have a combination of three things: the right property at the right price with the right payment or financing structure. Now, how that has helped us was that, yes, you talked about everybody in the past didn't want to go that far out, and what we decided to do was we decided to move that far out. And the thinking at the back of our mind was that, look, where was Lagos going to develop across? You had the Lagos-Ibadan Expressway, you had the Badagry axis, you had the Ikorodu axis, and then you had the Lekki axis. And we asked ourselves, where would be the most interesting place for people to think, to feel like they would like to be in the future? One of the things that drives the development of most residential enclaves is proximity to CBDs. So we looked at all these three nodes. Number one, what was the closest and most commercially viable CBDs to these particular locations? And then number two, which of these axes was receiving a lot of government investment in infrastructure? So we looked at Lagos-Ibadan Expressway. Yes, close to Ikeja, CBD, the Ikeja allows our CBD, but there's really minimal excitement in terms of that CBD, and that formed the basis of us pitching our tent with wanting to go that axis Lekki. And of course, at that point in time, there was the toll road which Lagos State had already gone into a PPP arrangements to build. So that formed the basis of, okay, on that basis, people might probably like to live there. People also want to be associated with something that they like. And that from the basis of us developing a golf club there. Honestly, when we developed the golf club, there was nobody in management that could play golf. So it wasn't because we liked playing golf that anybody decided to play golf. And at that point in time, we started building, interestingly, we actually, even though we started building a golf course, but what we started offering was affordable houses. And we tried to work with a combination of the right property at the right price with the right payment or financing structure. So at that point in time, it was basically instrumental plans. We gave them as much as 18 months. Honestly, that 18 months is really more like 24 to 36 months in most cases. And that worked for a lot of people. So for Adiba playing fields, in give or take like 6 months, we sold almost about 600 housing units. Nobody did mortgages at that point in time. Because, 24 months, 36 months, and the promise the product was being offered, it seemed like it was something that people could work with. But things changed as the years evolved. Sometime in 2020, 2019, when we were doing another affordable housing product, that's the Beachwood Park, we had to tap into mortgage as a way of addressing that final bit, getting the financing right. And I don't know if AG Mortgage is AG Mortgage was very active in helping us to get NHF loans for most of the people. So we delivered, give or take, almost about 400 housing units along that axis. And really, the only way I can say we've succeeded is just being able to consistently combine right product with the right at the right price, supported by right financing or right payment plans.
Thank you very much. If I may say, so in that access, like, what's your total production so far?
Total production so far, we've done, give or take, about 5,000 housing units in that
Well, to say 5,000 in, I think, odd 8 years?
Give or take, you're talking about 10 years.
I think that's commendable within this space. One round of applause for me, please. And this is in a time where effectively, I'm not sure, we say in the last 5 years, demolished over 50,000. And how many are we producing? So I think it's commendable. And I'm not sure we have that quantum of developers doing such magnitude. We have between that 3, 4, 500 in pockets again. So I think it's very, very good. But like we said, flowing from yesterday, one of the things that needs to happen is where you have developers really developing for people. That's anomaly where in Nigeria you have the poor, where the anomaly from yesterday was the rich build and the lower class buy. Meanwhile, it's the structured the other way around in Nigeria. And to have that, you have to have developers that have the capacity to be able to produce in such numbers to be able to soak up the demand in the market. Thank you very much, sir. Let me start with Roque. What has been the effect and on your books and the numbers you've done with the MRIF coming out? What have you guys said? And do you think it's the right direction? How do you think it is to play out? Thank you.
Okay, the MRIF has actually impacted positively on the mortgage business. I actually wanted to ask them, out of the 5,000, can you just tell us an estimate of percentage number of those people that took mortgage out of the 5,000 housing units?
Okay, I think for the mortgage is usually more on the Beachwood Park. The Beachwood Park, that's why I said we delivered about 400 housing units. I would say out of the 400 housing units, I think maybe like close between about 150 to 200. That's really where you have the mortgage. And the mortgages are largely NHF mortgages.
I think the reason why I asked that question is also to portray the points of the MRIF, because before now, I mean, the mortgage banks did not been doing what was expected, but that's before now, because of the cost of funds was very high. Because by the time you collect deposits from maybe some of you developers, and you are asking for maybe 25%, and by the time you are giving out that kind of using that kind of fund to lend, you should expect what the interest rate will be. But with the with the introduction of MRIF, I think we have better leverage now. And most mortgage banks, we have seen the numbers. I mean, a lot of people have taken the MBAN money and they've created so many mortgages. So I think we are in the right direction now. So we just want to ask the developers, try as much as possible to do the right thing in terms of getting the necessary approvals, making sure that you have your title perfected. Because even with the MRIF now, we have also seen some developers, they move to sites, no building plan approval, no layout approval. And we also want to create those mortgages, and we want to ensure that we cross all our T's and dot all the I's. So that, we saw the number of houses that were demolished in Abuja, even in Lagos. So it's important that for us to drive the MRIF, and we hope it's going to be sustainable. We need to scale up. So I think we are in the right direction. And we also, I don't know, what's his name? The MRIF guy was here yesterday. And because he said, please remove that cap. Because that is another limiting factor. So if by the time all the mortgage banks hit their limits, what's going to happen? So I think it's something we also need to, we need to engage the ARM to see how they can expand that scope. Because based on the discussion I had with some of the MPCEOs yesterday, some of them, they've gotten to the limit. So what happens? So I think it's something we need to start discussing with ARM and Ministry of Finance Incorporated. Thank you.
I have no idea why I decided to mention them. And I'll tell you the reason why. Because I have an implementation team that actually implemented them. So what I'm going to give you is I'll give you a bit of context as to why that limit was introduced. I can see the bits to it because I was part of that whole thing. So typically, as you would expect for most funds that you want to start, before you start a fund, you typically need to have assets within which you are more or less bringing into the fund. MRIF was more or less one of the first few funds that you are starting without any single asset. The only thing which we had as a basis of selling MRIF to be able to get private sector participation into it was a structure that was risk-based. So it was very, very much important that to the private sector, you showed that, look, there was certainty of whatever investment they made into the fund, that it would recover that investment. And that was the reason why it was important that in terms of the way they structured that fund, there needed to be a shared risk approach, whereby, yes, the fund exists to create mortgages, but at the same time, the parties which are going to be involved in running that process, there needs to be a sort of shared risk approach, and which is the reason why there are different levels which form the basis of determining the cap. Because the whole idea here is this: in the event that a bad debt happens, you want to have that assurance that the institutions that are the first port of addressing whatever the client is, they also have the capacity to be able to carry it. It's all part of trying to just create that risk framework that will give investors the confidence to be able to invest in the fund. And I mean, you can see, originally we wanted to raise just about 100 billion, but that private sector tranche was oversubscribed. The fund is supposed to be about 1 trillion. There's still a lot more room. And the one thing I can tell you is that the fund manager is adapting the fund to the demands of the market. So if you remember clearly, when we started the fund at 12%. That was the mortgage, 12%. But based on certain levels which we could adjust, it came down to 9.75%. Originally, equity contribution was supposed to be 20%. Based on certain levels we could adjust, it came down to 10%. And so the way I want you to see it is that, yes, continue this engagement with ARM, and based on the evolution of the market as levels change, it's not impossible that there are certain things that could be adjusted. But it was very much important at the start of the fund that you create a structure that the market will be comfortable with, to be willing to invest in that structure. Just wanted to make that clarification.
Thank you very much. So you're coming from the point of, okay, people who've put for us, Abi. Yeah? We'll take off the caps eventually. But thank you very much. Ngozi, please, what has been your experience so far with everything?
Okay, I spoke briefly about it yesterday. Every opened up the market. It stimulated so much demand. I mean, I can't, the loans we have pushed this year, I can't remember any particular year we did. In fact, some years rolled together. So that simply speaks to the fact that the market is there, but what has been a drawback has been the high interest rate. So with the commencement of every, the single digit, a lot of people are interested in moving their own homes, and they are coming in their numbers. We've exceeded, twice we've exceeded the limits given to us. We exceeded the first time, we went back to them to say, you know what, we have to extend the limits. They extended it, even extended it like 3 times, and right now I've exceeded my limits with every. And I was speaking to me yesterday, and I said, I have to close this year strong. I still have piles of requests. I haven't processed them because they exceeded my limits. And then he's talking about going back to the committee or whatever. I said, we don't have that time. Because these people want their money and they want it today. So I don't know how long it will take you to get approval. Maybe you have to give me an interim approval, I don't know. But I think for you to be able to close out the transactions that I have. So yes, MBAN has actually stimulated demand. So much so that everybody now knows about mortgage. That wasn't the case before. Before, a lot of people didn't even know we had mortgage in Nigeria. We talked to them about it and they're like, mortgage, really? Is it possible? But the every publicity has made every household know that, oh, you can actually own a home through mortgage. So it's been very helpful, especially because most of us in mortgage bank came to a point where we were struggling with liquidity. Our refinancing company also seemed to be stuck a bit, so we didn't have that fallback. And then Emric came as salvation. And I'm hoping that, just like Ronke said, I'm hoping that we can sit down and look at how to make this sustainable. Because if we keep exceeding the limits, we may get to a point where, in fact, the board actually asked me, what are you going to do when they no longer want to extend the limit? What will you do? I'm sure that's the question everybody is asking in the mortgage industry. What will be our fallback now? If Emric says, look, you know what, you've gotten to your peak, we can't give you more money. So we have to look at how to make this sustainable. And then also open up more channels. I don't know if Phyllis is here. NMRC also has to look at it. So yes, everything is there, but it will be a good idea to have multiple sources. So that if I'm not getting from Emric, I have NMRC as a fallback or other sources. Liquidity is a limitation if we don't address it.
Thank you very much, ma'am.
So, just to add to it, within the structure of what we created for the MRIF, yes, the NMRC is supposed to be providing additional liquidity for you, and I believe that's something which they are working on. It's part of the reason why some of the terms which were set in time for the facility were meant to align very much with the NMRC guidelines, just to make it easier for you to be able to have a fallback position. But there is something which I would like to put to this house. Okay, like I said, I'm the interloper here, so that means everybody's all on one side. So it's very easy, everybody can stone me after I say this. Is it possible? Because at the moment now, the only type of mortgages that mortgage banks are comfortable with giving is on near finished homes. Is there a world where you probably might be willing to give mortgages on well-protected shell homes? And I'll tell you the reason why I'm asking this question. We all know what has happened with prices over the last couple of years. Prices of everything has grown significantly, everything is all triple jumped and that sort of thing. I have a playback in my mind some years back when Governor Fashola was addressing the public and people were like, look, you need to bring down the prices of these houses. And he said, look, anybody who can tell me where I can get low-cost cement, you please tell me, and then I will deliver low-cost homes. And it's the same thing that developers are being faced with. That look, you have to deliver homes at a certain finishing specification.
that finishing specification adds, give or take, 17 to 23% to the cost of your homes when you are finishing. Is there a world where, and I don't know the guidelines that drive that, but is there a world that mortgage banks might actually be willing to consider a shell home that is fully wrapped? So it's not like the shell whereby the windows are still open. You will define the specification, but that additional 17 to 23% can make a difference between taking a mortgage of 60 million and a mortgage of 48 million. That makes a lot of difference. And this is something everybody does. I'm sure you all know one until they moved into a house and they were basically just finishing it as they were living inside of it. This is already a lifestyle approach. So why don't we just formalize it? This is just something I'm throwing to the house.
I think we have that structure already. So even for the MBAN, the last time we had an engagement with them, just to see how we can promote affordable housing. And we said, there are a lot of developers that sometimes they said offline. They said you are the one taking the risk. If you know that you can monitor. So if you have for us in Gateway, we have a project team where when we disburse, they go there to check whether that's just to confirm the utilization, the fund utilization. So when you achieve that milestone, then disburse the next one. But for every, they say once the project gets to 75%, and the customer is willing to sign an undertaking that, yes, I'm buying a share house and I'm satisfied with what the developer has built. So we don't want a situation where the subscriber, we have disbursed money, and by the time, I have a lot of that experience, especially on NHF, that we disburse money to developers, and at the end of the day, we started chasing the developers, and the default rate was so high because the subscriber said that, see what the developer has built, he has not built it. So the risk is higher, but if we can manage it, if we have a good project team, I think it's something that a lot of us have started doing.
I also want to add to what she said. You can do like what we do in my bank. If I am going to finance shell, it means that what the developer is selling is shell. The pricing is for shell. Because if it is a completed house, but you want me to finance it while it is still a shell. Problem is, I have to do valuation. And the value that I will get definitely would not be sufficient to cover the exposure. So it's important that if it's a shell, I'm financing. So I know that whoever is buying that property is responsible for finishing it. Because we've sold it at the price of shell. So we've done a lot of shell because it's more affordable. It's more affordable, really.
Sorry. Okay. Yeah, please. We have one comment. Okay.
It was to the house,
Pardon?
The last
question was to the house.
Yes.
Not only to the panel.
No.
So, mortgage banks try to also do shell, but it comes with a lot of risk. When we are trying to help customers, most times you get your fingers caught. The customer, let's assume this customer defaults, and then you go to court, and then the court is always emotional in mortgage issues. This person is not living in here because it's not completed. He's already paid 20 million, and he paid 40 million, and the 40 million is now 60 million, and he has paid 20 million and he's not living in there. And in fact, the case we had, a lady lost her husband some years ago, but dressed that day as a widow. And the judge in Lagos State is quite popular. She also lost her husband a long time. When she narrated the case, I just sat down at the back, and the judge has to wipe tears. I told my guy, we lost this case. And she wrote the case off that day, very simply. So we have to be very careful with it. For every, I know what we try to do in the program is that once you are approved, we can process the mortgage. Because also mortgage takes a month or 2 months for it, and we expect that by that time you are nearly there. We have some developers also that we have an arrangement with that the customer does some payments, the equity is sitting with us. So of course the developer has the equity. We get to a high level on the shelf. We do an advancement to the developer, especially when we have multiple units. But it's a thin line, but we have to be very careful. You want to make the developer happy, you want to make the customer happy, but you are exposing yourself. And most times mortgage banks get into trouble trying to help those two parties. So that's just, some mortgage banks do it, like Ngozi said, if what you are delivering is shell, we know it is shell. I would always ask, we show us a means of completing this shell in 6 months. When you look at their payroll, their pay slip, and you know this person can. Some of them, we also give them a short term, you know, in addition to the mortgage, that you know you can pay this in 3 months just to complete this. So it's quite flexible, but care of managing that risk is very important. Thank you.
Thank you. You wanted to?
Good morning, ladies and gentlemen. It's good to have me back here again. I think my question is back to the MREF. As a mortgage consultant, we try to engage, I think, about 3 mortgage banks for more than 3 months, and it's a bit of a challenge. So I think if we can reduce the turnaround time for onboarding of the mortgage banks into MREF, it will help a lot. Apart from the upheaval that we are facing, I know we have talked about that. Some of the mortgage banks that have their presence in Abuja, Delta Trust, and the rest, they all know we give them a lot of customers, and we make hundreds of people, homeowners, through these mortgages. We draw more than 10 billion every year through mortgages to make people house owners. But with the introduction of the MREF and family homes, it will increase our services, definitely. But we are having a bit of a challenge. So I don't know if you guys can do something about that. It will encourage other mortgage banks. And also we help reviving some of the mortgage banks in the north, like Jigawa and Adamawa Mortgage Bank, all of them together. So we are doing a great job in the mortgage industry. But you need to come in, you need to help us.
Okay, let me correct. He's actually representing Mixstar, but he's talking from being part of the team that had worked on every before moving on to Mixstar. But I can answer for at least because we've been engaging with it's a continuous process. As I'm now from under 2 or 3, I think we have close to 10 mortgage banks that have been onboarded on MREF. It's a continuous process and it's an engagement. Because it's a new scheme, and like he had said, it was on a clean slate that he had started. They are taking it on the fly as it goes. So a lot has changed from when they started based on engagement with mortgage banks. And I know sooner than later we'll have a lot more of us on board. That's a given. It was yesterday and we still spoke about it. So yes.
I think also because I play the Abuja markets very well. I don't know what the nature of your challenge is, but I would think because I have this every time we do developers. So developers come all excited. Oh, we hear there's MREF, we have our subscribers. Please, can you onboard them? Can you process? And then you look at it, they don't have title. They don't have title, so you tell them, sorry, I can't do it. It's very frustrating. That's very common in Abuja. You have a lot of estates and they don't have CFO. And the underwriting standard is that it has to be a legal mortgage and all that. So you hit a roadblock at that point. A lot of developers are not happy. Some of them told me it's RFO that I have. It's not a final title. You still need a CFO to be able to register a legal mortgage. In Nasarawa State, for instance, RFO will suffice. You can register a legal mortgage with that. But in Abuja, the story is different. So that's a common challenge for developers in the MREF.
Okay, I think one of the bottlenecks we are having with regard to the affordable housing delivery in this country is the title selection. There is a lot of developers that come to that they have their properties, it is mass housing, the houses are affordable, but MREF and other institutions are not accepting any title apart from the CFO. So I don't know if
part of one of the things that we had said earlier on, and that needs to improve, change, or be morphed is foreclosures. With a lot of those mass housings, it takes a long while before it gets to a point where you can do foreclosure. And everybody, if I go and I give MREF or I give NMRC or you understand FMBN, the levels of acceptability of these things. So, like she said, they are in between titles. While you're having this, there's a timeline that even the FCD had given for you to complete and get your titles properly. You understand? So, what we believe is you should advise them as they're coming, they should do what is right so that it makes it seamless for everybody down the line to play with. Yeah?
Luckily, I think weekend is all about titling now.
Yes,
so any serious developer should work with the commission
so that from day one the transactions are sellable. Thank you.
I just forgot to share it. Since Uganda is placed more in the Abuja market. Okay, I don't know. I mean, that's where so I just wanted to find out, like Nasarawa transactions, which you've done a couple of them. You know, Nasarawa, the pool of lands, I think they are very efficient. But most of their transactions, especially this NTB, I don't know if that's efficient transaction. Anyway, the NTB, the way it's structured, you know, the developer has like an SPV with the Nasarawa state government. So they're not even issuing title now. They said they will issue the COO when the developer has almost finished the entire estate. And are we saying this kind of transaction won't be bankable? I mean, from what? Because I just think we need to look at it and then be able to come up with ways we can do our business. Even yes, there are rules here and there, but we need to be a bit flexible. Because we did the NTV. The only thing we said, we told the developer that give us, like we did a tripartite agreement with the developer, the Nasarawa state government, that as soon as the COO is ready, please forward it directly to the bank. Because if we wait to say until COO is available, we may not get business to do. So I just wanted you to address that. Since you understand.
The beautiful thing about MREF is that they have told us they will adopt your risk criteria. So if this works for you, yeah, good with it, so you can finance it. But you know, that kind of arrangement always backed by government. So it gives a certain level of confidence to you, because you know that the government will definitely give you this skillful eventually. So that's a different ball game.
Okay, thank you very much. Like you had said, I think it's also important that the various players next year, there are a couple of defining things that would happen next year. The NTA, the Nigerian Tax Act, is going to affect and change the face of everything that you understand, and it's something that one needs to be prepared for. From a developer's perspective, how you guys looking at it?
You know, one of the biggest things that is at the back of our mind is that for a number of our target markets, disposable income is going to reduce. Which is one of the reasons why I threw that question to the House in terms of, because most of the houses we've been focused on is delivering ready-to-move-in homes. And so, a situation whereby your disposable income has reduced as a result of taxation, that means the percentage that you have towards going to getting a mortgage has also reduced. So which is why I said it now makes a significant difference between taking a mortgage of 60 million or a mortgage of 48 million. That's, I mean, for us, those are some of the, let me use the word, innovative thought process that we're trying to bring to the arrangement. That look, we need to start thinking of new ways of delivering the same product, but in a way that makes it convenient for people, knowing that disposable income for that target segment of the market has dropped as a result of the tax implications that will kick in from January?
It's a very, because how have you guys looked at it?
Well, the new tax law, right?
Yes.
I think Dr. Roland has, I think, some enlightening campaign about the new tax thing and how it affects properties and all that. The truth is, we really don't have a clear picture of how it's going to affect us. But there's trepidation because, like he said, we assume or we expect that income will reduce because if they are going to make you pay higher tax, definitely your disposable income will reduce, and of course that will affect people's ability to even repay, especially even people already on board with you. Because you see, when you did the assessment of the appraisal, we appraise them based on a particular income level, right? And so if this is reduced, I just hope that it will not affect the ability to continue to service their loans. Right now, we don't know what it's going to be. We don't know what's going to happen, but we are not, everybody is anxious. Everybody is anxious, that's the truth.
I think...
Somebody wants to make a contribution?
Okay.
Yes, thank you very much. I'm sorry I came in late. I think where mortgage banks and mortgage brokers should look at, I think the tax law is really going to favor us. It's now time for us to focus on those that we have ignored. Everybody find the high net worth individuals more attractive. What the tax law is saying is that everybody that earns 800,000 and lower will be tax exempt. So really, the people who we do not see as worthy of our attention, what we need to do is to grow the kind of products that will favor them. Now, when I came in, I heard about developers and the challenges. I think as brokers, how we've been working with developers. When you approach us, we first of all ascertain what the volume of houses you're trying to build. Then we break those large numbers you have given into tranches. For Mixer, we had a meeting with them, and now that we have people on board for them, they don't have houses ready for us to push to their market. I've not met you, I've met your staff. So what I'm saying is that we need to focus on the cadre that is going to be tax exempt. And how will they benefit us? These are people that if you get them to believe in you, they are actually going to be willing to build up the savings. So they may not be ready market for next year, but they will be ready market for within the next 2-3 years. And this is something I have tried before. I don't know, I'm not sure if there's anybody who is the head of treasury of any mortgage bank here. Your treasurer should watch your average cost of funds. These people that are going to be tax exempt are going to be those that will fund and pull their funds together in order to be able to reduce your average cost of funds. Thank you.
Thank you very much. No. It's not a question of what it is afterwards, because she's also Jumoke is also one of our major players as one of our brokers, leading brokers. So and there's meant to be that ecosystem, brokers, underwriters, developers. While the mortgage lenders are the apex of the finance angle, the developers are the apex of the supply angle, and there has to be a symbiotic relationship between us because it flows in. Alaji, how have you guys tapped into the Abuja market? I know you spoke earlier on about sensitization and all, but have you guys been taking cognizance of this new tax law?
Actually, as Madam said, that everyone is anxious about this tax law that is coming next year. We have not started looking at that already, actually, but we know it's going to affect everything. It will affect the affordability of the customer. Take home will definitely reduce. So we know definitely it will be a challenge for people to afford a house that they can afford last year by next year. So the market will definitely go down, but thank God we have this 25% RSA, which will boost people contribution. But definitely it will be a challenging for the mortgage market, definitely, especially for the affordability for underwriting.
Okay.
Let me just lay my voice to it. I see it as an opportunity to grow mortgages, because a lot of people that don't believe in mortgage, I think now they would rather take mortgage so that they can have their tax reduced. Because if you have a mortgage, you won't be, that is tax free. So I think it will increase our business. So it's high time that we hit the market and make sure that we look for those people that usually they put their money in FX, they put their money in all of that kind of investments. So I think it's going to be a better year for us. That's what I see.
Okay. What I'm putting it, which is what I wanted to say. A lot of us don't seem to understand or play that leg forward. Interest on mortgage payments, especially for residential properties, is tax exempt. What it simply means is the interest you're paying in a residential, preferably, okay, if I use Lagos State, we'd say where you reside and you pay the mortgage on, the interest, all the interest you're paying on it, is tax exempt on a preceding year basis. What it means is the interest I paid in 2024, will be tax exempt or included in my payroll for 2025. The one for 2025 goes in for 2026, and is a massive savings for an individual. Secondly, which is also part of it, is that NHF contributions, pension contributions, and if you're doing NHF, is also doing, as private as saying you're doing voluntary contributions. All of these are also tax exempt. So there are different ways for you to creatively advise your market that these are things that pay you off. So instead of being paying tax straight off and it becomes an end, once you have some of these mechanisms, it helps you in savings, and then at the end of the day, it is still you that benefits from it.
So my question would be, yes, I get all that, right? If someone's coming to me to take a loan and maybe your salary is about ₦1 million, and because of the new tax thing, your salary maybe has gone down to 900 or 850, and I need you to be earning 1 million to even be able to afford, like, how do you even come across? Do you understand? Because I'm going to appraise you based on your disposable income. So before you even start talking about having tax waiver on your mortgage payment, you first of all have to even qualify for the mortgage.
Yes.
Isn't it?
Yes.
Yes. So that's what we are worried about. If your disposable income reduces, you won't even be able to come to take the mortgage.
Okay, so it's like most of you are just saying stylish. The problem is really the developers, the prices that we are selling the product. Because if we are selling it at a lower price, whether it's in 1 million or in 900, you probably would still be able to qualify, right? So it all goes to the cost of how we're actually delivering the price. The product. Thank you for the feedback in terms of shell, but there's still an additional component that still goes to the cost of developing your homes, and that is the cost of actually borrowing to build those homes. For example, under MRIF now, buyers are only required to make 10% equity contribution. That means the developer has the responsibility to provide the funding to get it to the point whereby that property can actually draw down mortgage. And that speaks to the point you are making, that you have people who are interested in mortgages, but the properties are not yet ready because the properties are still under construction. As a developer like us, we had to take debt to do that. And of course, we all know how much debt is in terms of funding construction. Now, and I don't know if this is the right medium to be saying this, but I'll say it anyway, in case this might be the right medium. The current CRR ratio for banks That is sterilized cash. That's basically just sitting in the bank coffers. What stops financial institutions to say that, look, as a means of providing intervention for the housing sector, can a portion of that CRR go towards funding housing projects, not at 20-something percent, but at 10%? What that does is that it brings down part of the cost of actually doing a development, because your interest is part of your cost. And it's all part of trying to reduce the price such that whether it's 1 million or 900,000, the people will still be able to qualify. So the combination of all these levers, number one, share housing, reducing the cost of debt would probably bring the houses closer to what the new earning direction is going to be. Just a thought there.
Thank you. Okay, give her, then let's take her, then we'll just wrap up on the session.
Sorry, I was just going to say that in future years, everybody will need to get very creative. When it comes to developers having access to even high interest rate funds, here's something that we had done before. The bank, we had to take, the customers had to access the mortgages for the unit. So what we did was, you're building 100 units, do them in tranches, and make sure that 50 or 20 is livable in. So those ones are for people whose affordability can actually take high interest rates, but they are unwilling to buy because the rate is high. So we spoke to the developer. What the developer was willing to do, assuming the bank was saying is 20%, developer agrees to be at 10% of that, and so they pay only 10%. So I'm saying that everybody will need to get very creative to be able to address the issues about the high interest rates. And then, of course, for developers, if you actually create products, which was what we discussed with me, if you actually create products, what you get is that you get people who are not, a lot of people do not even want mortgages. What they want is payment plan. And so the products that we marketed for you is actually not outright mortgage completely. So I'm just encouraging all of us, it's time for us to put on a thinking cap. We have to create new things that are going to work, because the market is evolving. Nobody has dealt with what we're going to face in the incoming years. Thank you.
Thank you, thank you, thank you. Any other comment from anybody? So, while we wrap up, please.
First of what you said, in terms of developers having access to cheaper funds to be able to build, so that can bring down the cost of the housing units. You know, PE said something yesterday which was critical in terms of trying to raise funds for the supply end of the market. But the risk, you know, everybody shies away from construction risk. So I think it's something that we really need to look at if we want those houses to be cheaper. Like what she said, there was a developer that we dealt with in the past. He gave subsidy. Okay, but when you put those loans, I'm not going to take the money. You warehouse the fund and you pay me, you know, a discounted, instead of me paying the normal fixed deposit rate, we'll crash the rate so that can compensate. So there are different ways we can, but the developers need to be up and running, especially making sure that they deliver to time and to specification. So that makes the work of the mortgage banks easier.
Okay, so thank you very much for all. And what I believe also is the same as we're also trying to de-risk the mortgage market, mortgage finance market. I think we also need to now look at how creatively de-risking the construction finance arm of the market, because without de-risking and identifying clearly where the major issues are, and some of it are regulatory, and then we engage it, and it will be hard for someone to, again, jokingly someone was saying in Abuja now, a lot of people might not, which president has said, I don't want to touch on the titles, or just like you say, until you're sure that you have a final thing, because what was obtainable before is not obtainable now. You get, and those are the realities of people trying to hedge their own risk as well. Thank you, everybody. Thank you very much. It's been good talking with you. Thank you for sitting on this panel.
to join them. Thank you, thank you, thank you. Please put your hands together for the Canadians. Come on. Thank you. Very distinguished guests, ladies and gentlemen, we are gradually coming to the end of the MBAN Conference 2025. At this point, it is time for a closed session for key industry stakeholders. On the first day of this conference, we had a mortgage finance roundtable. And some of the discussions that were held at that roundtable will be analyzed, and some key takeaways will be reiterated. And looking forward to 2026, we hope that whatever we discussed in this key stakeholders meeting will go along with it. Therefore, I call Mr. President, Mortgage Banking Association of Nigeria, Mr. Ayo Dini, who's standing right here. Please put your hands together for him for this final session of the conversation.
Thank you, everyone. Always difficult to take a session just before lunch and after lunch. So I'll try to make this fast. We've been here for 3 days. A round of applause for everyone. This is the first time. I don't know, Mr. Motosha is here and the POT chairman. It's possible there's been another time where we had a 3-day. Yes, at the time you thought everyone would tire out and nobody will show up today. But we thank all of you for your time. So we started on Thursday with the so this year being the first, our plan is to have another roundtable sometimes next year, and our plan is not to discuss the issues we discussed this year. Our plan is not to turn the roundtable to where people come and talk to us about the problems. We are tired of hearing the problems. But this year, all the major stakeholders came together, well represented by their MDs and their top management to tell us what they've been doing, because that is the first thing. We hear all these things. Some of them are assumptions. Central Bank, we had the governor represented in a speech that the person representing said the governor wrote himself. And the governor mentioned two things. That they are ready to work with us in setting up an industry working group to drive sustainable action to address the challenges and provide solutions. Secondly, that they are ready to listen to us on ways to catalyze dormant capital. Someone mentioned the issue of CRR, but CRR serves another purpose in the industry. Monetary sector's tool to manage inflation, because the reason why they are holding almost half of the deposits in the financial industry or held by financial institutions is just to manage inflation, money circulation, all those things. So if they release it again, there's a fear, there is disguise that there's a fear that it might lead to inflation. And we know the impact of inflation. It keeps moving interest rates out of our reach, and maybe Henry will come and say, look, interest rate keep growing again, we can't do 9.75 again. Or interest rates and inflation keep going down, and then they can come and say, oh, because it's going down, we can do lesser than 9.75, or we can attract more money. So in trying to look at ways to catalyze this dormant capital, we should not be a bit one-sided. we are very clear about what the CBN can do. CBN communication is clear to us. There's never going to be an intervention fund. And they want proposals on how to catalyze that dormant capital. They want proposal on the roadmap for the industry. In fact, the issue of this roundtable started with the meeting we had with the governor, and they said we should have an industry position. And we thought having an industry position, just as mortgage plan, might be self-defeating because there are other parts of mortgage finance. And we've seen family-owned funds come to talk, we've seen MRIF come to talk. So we've been able to see what other people think should be the way forward for the industry. So when we present a position paper to CBN in the next 1 week or so, we'll be clear. They also want our position on where we see the industry go in terms of recapitalization. It's good we have a view of what OFID is thinking. And I don't think it's a view of what the government is thinking. That is OFID. That if you want to grow this money, this is the level of capitalization. But that day I was also able to show him, just a bank. There are other banks where they share capital to the total assets very much more widely than Standard Bank. So if they can create exceptions for those, then why not for the sector that we're trying? So that is all that the CBN was trying to point towards. OFID mentioned that they've heard all our cries and appeal with regards to the permissible businesses, and they've accepted it. But there's a new rule book they are trying to put together for the whole banking sector, even including commercial banks, the DFIs and all. So FPRED, the last time I spoke with the director is that bringing out just a part, mortgage bank, which is less than 5% of the whole financial services sector, will not help. And they promise that first quarter next year we should have the release of the rule book on the permissible businesses, which it will help us. On my own, and thinking with some other leaders in the industry, opinion is 5 billion, 10 billion for states and national licensed mortgage banks who be a good position. And that's not the position of every mortgage banks seated here. But unfortunately, I don't think we need to do a poll. It's just a suggestion on the table. But subject to the fact that we will have the mainstreaming of the permissible businesses and the implementation of the GSI. They told us also here that they were ready. The governor in his speech said he has approved the implementation. So why is it not implemented? So mainstreaming of those two critical things, the permissible businesses change and the GSI for a year or 18 months should be a precursor to a recapitalization drive, because that will help us to attract the right type of capital, and that is going to be our position. So they can decide they just want to do it first quarter 2026, but we have stated what is reasonable. They ask for our position and we have given them. So that is it on the CBN side, on the regulatory side. Then on FMBN, the MD was here. He represented the minister. The minister also stated that he supports us having a coordinating the industry working group, which we accepted. The minister talked about land reforms and titling. These are things that he can do because he anchored a meeting in Kano with all the directors of land of all the states. This is where, unfortunately we could not be there, because while MBAN was invited, we actually want to see all of them and be able to invite all of them to a meeting maybe in Abuja or Lagos and say, please, what are the issues and how can we standardize some things? But unfortunately we could not attend that meeting. But I sent to him and his PA, what our initial thoughts are. On FMBN, there's this happening there's a need to revise, to review the 1992 Act. It is hold for purpose and for use and for our time. They mentioned the need for a recapitalization, FMBN pointed out that they've done 520 billion in NHF loans, and they are targeting 120 billion in collection this year. So over the next 5 years, FMBN will have more than $500 billion in collection. But for 33 years, FMBN have done 520 billion. I don't think the collection of FMBN to date is more than 2 trillion. And that is the reason why we keep pushing for a reform, because if you look at the pension fund, they have over 22 or 23 trillion. So why is that able to perform far better? And that is 2014 or 2004 to day 21 years to 33 days. Please, you are blocking the bill of people. Maybe you can step, this thing can still record here. So why are they able to do far better than that? It's just the fact that they allow private sector to play their part. For FMBN, we talked about the cap. CBN pointed out here that they've approved internally, subject to the release of the rule book. The approach that I've agreed with the MD of FMBN is that we will have to do a joint letter from MBAN and FMBN notifying CBN that, look, since it has been approved in principle, they will continue. The last time we met with CBN, they were like, there are some things, if they don't tell you not to do, do it. They will come to penalize you. You say no, okay. So we are not holding your hands. We are a regulator. It's not everything will be encouraging you all the way out. So FMBN and MBAN will be writing a joint letter on this cap so that mortgage banks that have reached that limit can access more money. And the truth also is that some mortgage banks have even exceeded that limit. And Central Bank over the last 3 years have not penalized FMBN on any. The other issue with FMBN is the placement of funds, which we discussed with them, myself and the ES in Abuja 2-3 weeks ago. They were open to it, and at the meeting, he also pointed out that they are open. So we're going to write them for them to roll out a formality. They can't hide, because CBN also pointed to us why we think that CBN is not blocking you. CBN governor was sitting just beside it. CBN reps for the governor and OFI director, the person representing the OFI director said, CBN is not blocking you from placing money with primary mortgage banks. You accredit primary mortgage banks. In accreditation, you do examination. We pay $1 million for the examination. They come and spend 1 week for us. But they give most of their money to asset management firms that their shareholders fund is less than 10% of most mortgage banks, and they don't accredit to examine. So there's no reason for that. So it's another follow-up we will do. Next time we're not going to bring up that problem. It's not left for us to solve it and push them aggressively. And if possible, use the media to also push them if need be to achieve our aims. Then we had MREF, we had family-owned funds talk to us, NMRC talk to us about what they are doing, and we queried how they can do it better. The issue of limits for MREF was discussed. The issue of blending, that's partnership. MREF and FMBN agreed to blend. And FMBN MD committed that once MREF disburse their own half, it will disburse FMBN's part in 48 hours. They also agreed to a partnership on the trustee, the same trustee model we currently use. So that is something that MBAN is going to drive. I know Dr. Yagoyadu is here. It's like MD is committed to a lot of things. Yeah, we know. So MBAN is going to drive a meeting of all parties for us to come together to have a model that works, so that from January we will have something cheaper than 9.75. Because blending 9.75 with 6%, you have 7 something. And so it also helps mortgage banks with this limit thing. So if MREF give you 2.3, Federal Mortgage Bank is not giving you a limit, 20% of their shareholding. So there's ability to blend, and then you can also blend the family-owned funds. So while we complain about these limits, which MREF plans to solve, there's a lot of opportunities for us to take. Then we also invited PENCOM and PENUP, where they discuss about opportunities that we can take, especially with structuring money for the supply side. as well that SEC did a presentation yesterday, fantastic presentation. And they opened our eyes to a lot of opportunities based on the new investment act, ISA 2025, the reform. And they were telling us, even for the pension fund, a large part of their money ordinarily should be invested in real estate. And he has invited me to a meeting upper week Thursday at SEC office in Lagos to discuss the possibility that the DG is very interested in working with us. They also want to show that they are doing their part. The PENCOM issue, I would say we're supposed to have a resolution of the issue of the mortgage banks. 7 mortgage banks affected with the PENCOM notes behind them. There was supposed to be a meeting on 24th of November. That was Monday between the director of OFID and the DG of PENCOM. The DG of PENCOM had some emergency, and she suggested that some directors represent her. But the director of OFID insisted that, look, it's better they have that meeting. So that meeting is going to hold next week in Abuja. But aside that, the teams working on the OFID side and the PENCOM side, they've only been talking on the phone and having virtual meeting. On Thursday, the 2 teams had the opportunity of meeting together and seeing each other. So the meeting next week will just be, so the PENCOM issue is that there was an examination by CBN and they did a report which they submitted to PENCOM based on the Mortgage Bankers Committee meeting we had last year when that issue was first raised. We thought that it would have been nice if OFID and the CBN has engaged the mortgage banks. You know, when you do an examination, tell us this is what you find out and how to work better. But on their own side, OFID thought, and their position was that it's a special investigation. So the decision whether to discuss the findings with you is discretionary. But we are where we are. PENCOM requires that OFID send a follow-up report to it, saying, okay, we've sent a report to you before, this is the improvement from these mortgage banks, and this is the plan going forward. And based on that, you know, PENCOM can raise circular to the PFAs. Without that, there will be no circular to the PFAs to change this situation we have. And that is the purpose of that meeting, on how that report will be done in a way that will not also really look as if CBN acted wrongly by forwarding that letter initially or that report. So in the next 1 or 2 weeks, we expect them. In fact, while they were having lunch, they put a call to the DG of PENCOM to talk to the OFID rep, Mr. Bassi. By the side, I was there with them, and that issue will be resolved by the grace of God. We know it has held a lot of mortgage banks down. It's a lesson learned. It's also better engagement. We agreed to a quarterly meeting with PENCOM. They've made their door open to us, and that will be an opportunity for them to tell us all the observations they have, all the petitions. So it's not until that circular come, you know, and so it's on MBAN Secretariat yes, that quarterly meeting must hold. It's virtual meeting. Please, it's virtual meeting. You set it up. We have the very good relationship. Then the PENCOM Act is being reviewed. Vis-a-vis the 25% RSA. We have some proposals around what the extended use for that 25% and graduating based on the size of the money. And for some people, if the money is less than 5 million, there's no need to allow people to take. There's nothing we want to do with 1 million in reality, so that we don't get ourselves in this situation. There's also discussion around paying charges. In fact, we saw documentation when we went for the meeting that point to some mortgage bank, someone withdrew 500,000 from a 2 million RSA position, 500,000, and the fees and charges was more than the 500,000. And then insurance was charged when you know you are not booking a loan of around 300,000. So they had a lot of petition to DSS. The vice president was there, DSS, EFCC, And it's quite embarrassing. Very, very embarrassing. There was a mortgage bank that has more than 100 cases like that. People withdrawing 250,000 and the fee. And then you now take insurance when you know you are not doing mortgage. And that's why I say when helping the customer know that you're exposing yourself to customers will put pressure. Everybody will receive this pressure, but you're exposing yourself to that risk. So that is it about the supply side is very critical, and we need to be forward looking on the supply side of our business. How do we help developers that are serious? Federal Bank is not going to do it a lot because of the EDL problems it had. But how can we structure something with SEC and the pension fund? The PENOP has also told us they are ready to meet with us in the month of September. The PENOP executive secretary was here, and she said she can call a meeting of the ESCO of PENOP. That's represents 6 or 7 presidents, their neck, and they can meet with us. How they can have a vehicle or a structure, some financing for suppliers that will go through mortgage banks as holders, So the issue of monitoring and passing some of the completion risk will be managed by the mortgage bank. We have a lot also to cover on the side of the fact that for the industry working group, we have engaged for the first time. We brought in a consulting firm, EY, to work with us here to put together the documentation and be following up around for the presentation. They will work with the secretariat going forward to drive this, because what we want to achieve is to have a bill that we can say this is a reform bill. Stakeholders in the industry have shown interest in also supporting with money. Money is the chariot, and also with assets. In fact, Federal Mortgage Bank, then they mentioned they had some relationship and they want us to even engage the National Assembly together on that bill, which is going to focus on uniform underwriting standard, the mortgage foreclosure. Yeah, that's the same thing. Yeah, those are the two. Then our Chartered Institute of Mortgage Brokers. Those are the three. Those are the three major things that we want to put in that bill, and they are ready to support us. The minister called, yesterday to also tell me that they are ready to work with us. They are ready to work on that thing. We will host the secretariat. Our plan is to co-host it with another partner in the industry. We will ask for, just like the way the data for the housing data registry thing that NMRC. We don't want to burden NMRC again, but we have NMRC stakeholders here. They are very supportive. The minister also showed interest to co-host the secretariat. What we plan is to have a chair for the industry working group. A chair that will not be a MD of the mortgage bank. And there will also be a co-chair. And other stakeholders will be represented. The unending partners, government agencies, the Nigeria Governors Forum, as well as real estate brokers, all other stakeholders that are going to show seriousness. And we have our secretariat and EY coordinating that. In all, I would say we've had a good time discussing and talking about to move the industry forward. We have a lot of meetings to hold over the next 1 and 2 months. Lagos State Government, we plan to meet with the governor. So the thing with state governors is we are looking to have, for some states, on the pilot of having a mortgage desk in their Ministry of Land. So anything that has to do with title perfection and legal mortgage, I can pass through a one-man desk and can also look at the status, so it is measured. We are meeting with every family-owned funds also in the course of next 2 weeks. A lot of mortgage banks are having challenges to onboarding where they are stock to review and what they can vary, so that by first week in January they can start meeting with PENCOM and SEC, meeting with CBN. So there's a lot for us to do to drive out these solutions and implement them. We plan to inaugurate the working group virtually towards the end of December, so that by January they start the work. And like I said, the next time we are meeting, our plan is not to discuss these problems, it's to discuss how far we have gone with implementing proposed solution. We are sure that there will be some other problems that will come. It's a trend. So we'll be facing those ones together now. So if I don't have any comment, I don't need to go for lunch. Ladies and gentlemen, thank you for your time. We've had a fantastic time having you around and for your support. And I hope that going forward, the scale, the bar we set for ourselves and MBAN, we will always work to do better. And then we'll make more money and then we'll be richer, There's nothing that stops us now. Yeah? And smile to the bank. Yeah, we'll be richer. The MPs will be richer, the banks will be richer, pay dividend. We can all come here and sit down. When when your bank account is big, there's a way it affects the pressure on the face of the MPs to go down a bit. Thank you everyone and then enjoy your watch.
Ladies and gentlemen, in these words, the next time we are meeting is not to discuss this problem, but to talk about how far we have gone in the solutions to these problems. Please give him another round of applause. Thank you very much, sir, for an overview of all that has been done so far. Distinguished guests, ladies and gentlemen, it will take just 10 minutes of your time. One of the sponsors of this event are here for a presentation. They were supposed to do it before now, but they were not here. But they're here and we didn't know they were here, so they'll just do it now in 5-10 minutes and we'll be out of here. Thank you very much. Help me welcome Olalika Ajani for Peerless as it comes to this presentation.
Thank you so much. Good afternoon once again. My name is Olalika Ajani. I'm representing PLS Subject Global Services. Our focus is on core banking solutions and other enterprise solutions. So I'll briefly run through my slides and I'm guaranteeing we can run through this in like 10 minutes, please. So we are building the future of core banking and enterprise solutions for mortgage banks and specifically other financial institutions. Please, let's move. So the way we think around customers, mortgage bank as a customer, it's not necessarily for you to come and we do things, but we think of it around partnership. So it's a vision where we believe that Nigeria financial institutions, specifically the mortgage bank, can power innovation. And the last parting word from the president actually speak to that. So we want a situation where next time we are coming back here, we are talking based on the solutions we've provided to some of the problems being raised. Please, let's move. So some of these have been talked about earlier around where the critical turning point for Nigeria mortgage industry, and part of it is what MBAN is doing, and how can we use some of our solutions to power this. Now, core banking has moved beyond being monolithic. So what we have today, especially for the legacy core, is around monolithic solutions, where you see a mortgage bank want to actually need maybe a loan just for them to manage loan module of their operation, and you need a core banking that is going to support you to go through this. But what we have is you need the legacy core banking now pushes you towards to start getting what you don't need, and what we are pushing to you is microservice based in such a way that if what you want to do is basic investment, basic loan management, we provide that for you. Fintechs have been disrupting the way people think, and this has been shaping experiences. we see today as a young professional, I use myself as an instance, not until when the Emory, home fund and things around that start popping out, and this is why, this is when we start to see that, wow, it's very possible for me. I watched a video of Mr. Adedeji in one of the podcasts when he talked about the fact that you can earn 600,000 monthly and own a home in Nigeria. It's something that really opened my eyes, because before, most of us think, if I'm not earning up to maybe 2 million or making up to 2 million monthly, I'm not sure I can do anything around mortgage. So, the thinking around this is that we want to see where I do not need to meet someone to actually, or I do not necessarily have to have a lot of human contact to achieve, or for me to access mortgage, basically. So, and this is what we try to power using our core banking. And as of today, you can see that 60% of the banks need to be more cloud native, and it's no longer optional for you not to be SaaS based as an organization or as a financial institution. So, and this is where PLX actually comes in. We are building, modern enterprise software that helps you deliver your vision as a mortgage bank, and we are creating pathways for you to unlock new revenues, because you are talking to new set of customers that are very tech savvy, and that we want to deliver transformation at scale. And importantly, while doing this, you still want to boost the productivity of your employees. So let's move to some of the solutions. Next slide. So these are the big points we've seen today among mortgage bank. One of it is implementation cycle is very long. The high cost of core banking upgrades for most financial institutions, the lack of flexibility of modern solutions, and the poor local context. Most of the core banking, mortgage banks, even other financial institutions used in Nigeria today, do not have local context when it comes to building of this solution. And how do we solve for this? It's very simple. Our products are African built, they are fully built by Nigerians with the touch of the local context. They are API first, and importantly, they are cloud native. Also, it is designed to grow with you. So, which means whether you are starting a mortgage bank today, you are new, or otherwise you are an established mortgage bank, it is designed not just to build with you, but to grow and to achieve your aim. So, the next slide, these are the product suite. We have CBAS, which is a core banking for conventional banks. We have Mizan, which is a core banking for Islamic banks, or what we call non-interest banks. We have Explorer, which is a CRM with unified customer interface for your customer relationship teams. And we have Kusala, which is a workflow automation product. So I'm just going to speak to two of this, and that will be for CBAS. So CBAS is that core banking that is specifically designed for you in mind. So I mentioned earlier that they are modular based, and also they are microservice architecture. So what does this translate to for you? It means that irrespective of what you use today, what kind of architecture you use to operate today, you can onboard on CBAS and immediately pick just a single module and say, I'll be working with the loan module, for instance, or I want to work with the investment module, as maybe what you're trying to do with Pencom and things around that. So it is very modular. You don't need to offtake all the modules. CBAS even have over 22 modules. So which means anything you think around treasury management, you are trying to move maybe from a mortgage to a full-fledged commercial bank. So it means CBAS is positioned to grow with you over time. And for Kusala, we said it's a no-code automation platform. So things around document signing, things around when it comes to automating your process, workflows, and that is what you use Kusala for. And all these solutions are locally priced, which means it reduces your FX exposure drastically. So they are not just tools, they are actually infrastructure for modern businesses and enterprise business over time. So I talked about the key advantages of what you get, using CBAS or any of our solution. So the mortgage decision transition, the mortgage decision gets used to using localized system where you will not be spending, dollar. I talked about FX exposure, and also it is built with compliance in mind as you use some of our solution, and also they are API first, they are API enabled solutions. So which means some of the third-party integration you use today, you can immediately connect it to CBAS. Those talk about things like wellness check, or maybe you have to be connected to needs and things around that. And for workflow automation is built and is inbuilt into CBAS itself, and also you can use our workflow automation solution. So at the end of the day, like I said, you are not just a customer to us, and you are not just a vendor. So we want to co-build with you, because at the end of the day, we know that while we have some of the context, some of the conversation we've had with leading industry leaders within the mortgage system, we want to continuously get insights from you to build a better solution, especially one that works for the mortgage bank. So we want to unlock scale, and importantly, we want to co-create success. So thank you so much, everyone. So I think one last thing I would like to share with us is that we are giving you the Kusala for free for the next 6 months if you are interested. It's a workflow automation tool, so which you can onboard your company and you can actually test run it. So just to put context, maybe today you use like Process Picker, Flow Mono, any of those FX exposure related solution. So you can actually use Kusala for that, and these are locally built but global grade solutions. Thank you once again.
Thank you very much, Olari Journey, representing Payments. Please give him the noise and the round of applause, ladies and gentlemen. At this point, distinguished guests, I would like to call on the Chairman, Planning Committee, the Vice President of the Mortgage Banking Association of Nigeria, Mr. Ainsley Adebo, to come forward for the vote of thanks. Please round of applause for him as he comes forward. Thank you. Keep talking till he gets here. Thank you, thank you, thank you.
Chief, I will take over your job very soon. After 3 days, I think we're making progress, and I thank everyone of us seated here and all that have been involved in this whole activity. The end game for us, mission, is to make ownership a reality across Nigeria, both from Adamawa to Delta, not only from Lagos to Abuja. We've said enough, a lot of advices have come, and actionable items have been carried. Like my president said, by the time we're meeting here again, is not to come and discuss those problems. It is to say, this is what we have solved out of all of this. Yeah? And it's not the same thing, it's not the same thing carrying on. We, like leader, all of us have left our time and coming here. We appreciate everyone. Appreciate my members of the planning committee. Appreciate the ES and the secretariat for all the help of putting all of this together. All my colleagues, all my MDs, fellow MDs, and all the industry players from MBAN, FHF, MRF, HSF, all of them. We thank all of them. Our partners from FinTrack and CBAS, thank you for participating with us. As we go, we pray that God goes with us. We shall all arrive safely where we've left from. He has kept us this far. By the time we meet again next year, He
those who are commercial, I'll be chasing you to the person knows who I'm talking to. To those who are commercial. They'll be the one chasing us at that point in time.
You should be the correspondence bank for moving bank.
Okay, you see? I'm still moving to that place. I will have much more in this. And like I all said, a lot of what is carried should be sustained, so that when we look back in another 5-10 years, we'll say this was the start of a new mortgage banking industry. Thank you everyone, and have a safe trip.
Thank you very much, sir. Very distinguished guests, ladies and gentlemen, esteemed colleagues, partners, and friends in the mortgage and housing sector. As we come to the end of the MBAN Conference 2025, it is clear that the conversation we've had over the past 2 days not only matters but also strengthen the collective resolve to transform housing delivery in Nigeria. As we close this year's conference, we carry with us powerful insights, renewed connections, and a shared commitment to act. Let us leave here determined to turn ideas into implementation. Partnerships. Please, we are not going out yet. We are here to take our group photograph. Please. Group photographs, please. Everybody, please. Brother Shola, please meet Mr. President and the dignitaries. Group photograph for the conference. Thank you. Ladies and gentlemen, as we close this conference, we carry with us powerful insights, renewed connections, and shared commitment to act. Let us leave here determined to turn ideas into implementation, and partnerships into progress, and policies into tangible improvement in the lives of millions of Nigerians. Thank you for being a part of MBAN Conference 2025. May God bless you abundantly. Can I have your attention, please? Please, can I have your attention? Can I have your attention, please? Can we all come out for the group photographs? Can we come out for the group photograph, please? Thank you. Can we come out for the group photograph? Please, enough of the discussions. Can we come out? Yes, everybody together. Cameraman, come on and arrange them. Cameramen, please arrange them, please.
They're already doing it now.
One chair, there are chairs now. They should make them women sit. This is
Please, President, it's welcome. Anything matter what it is, you don't just get
Are we good?
Yes.
Please put a smile on your face. At the count of three, we say MBAN Conference 2025. 1, 2, 3. Thank you. Thank you very much. A round of applause for yourselves. Now, because we are not going to sing before Christmas, can you shake someone close to you and say, Merry Christmas? You can sing the song. We wish you. Merry Christmas and a prosperous New Year to you.